Hello everyone, this is Matt with InvestorFeed, and in this training we'll be covering our $1 million investor cap raise Google Ads lead generation formula. And this is our exact step-by-step system to generating 10 to 50 plus high net worth investor leads per day and raising unlimited capital for virtually any business venture, specifically with Google Ads. So with that being said, let's begin. So here is each and every section that we'll be covering in this training today. Number one, I'm going to be introducing the new direct to investor era for raising capital online without any gatekeepers. In section number two, I'll be covering exactly what are Google Ads and how can they be utilized for high net worth investor lead generation. In step number three, we'll be doing a complete breakdown of our entire Google Ads high net worth investor lead generation funnel. In section number four, we'll be covering our step-by-step guide to setting up a Google Ads high net worth investor lead generation campaign. In section number five, I'll be showing you exactly how to leverage our InvestorFeed $100 billion plus investor audience network to advertise direct to investor. And then in the last section, section number six, I'll be revealing our proprietary digital fundraising operating system to raising capital on autopilot for virtually any business venture. So let's begin the very first section. So most people don't know this, but there is actually a new way that new school investors are using to raise millions of dollars in capital online faster and easier than ever before, without being beholden to traditional gatekeepers like Wall Street, Silicon Valley VCs, angel investors, and other large institutional investment firms, without relying on your existing network of high net worth investor relationships, wealthy connections, or family members, without wasting hundreds of hours cold calling, cold emailing, and networking in person with potential investors at meetup events, without having a super experienced investing track record or reputation, and finally, without requiring long, drawn-out manual in-person investor relationship building cycles with unpredictable results, aka whining and dining these investors. So who can take advantage of this new era? Well, number one, real estate investors and syndicators who are looking to raise capital to acquire a variety of different types of real estate properties. Number two, venture capital and hedge funds that are investing in a variety of different companies and assets with potential for substantial returns. Number three, small business owners or startup founders looking to secure some funding and capital for business expansion, working capital, and acquisitions. Number four, charity and nonprofit organizations looking to raise funds for donors to support their charitable and mission-driven social causes. Number five, private and hard money lenders looking to provide asset-backed loans to business owners and real estate investors, so they need capital for that. And number six here, wealth managers and financial advisors who are looking to find high net worth individuals to provide capital management services. So we've coined this revolutionary new movement, taking the world of finance and investing by storm, as the direct to investor or D2I fundraising. So basically, how does this work? Well, the same technologies and emerging global shifts that have enabled the direct to consumer or D2C movement and empowered millions of small business owners and entrepreneurs are now being utilized specifically by capital raisers. So what are the global shifts that have enabled this direct-to-consumer or D2C era? Well, number one, as we all know, digital platforms. So anyone can now set up a website and take payments online, allowing businesses to sell their products and services directly to consumers online, bypassing the traditional retail gatekeeper channels. Number two, social media. So anyone can now set up social media channels on platforms with billions of consumers like Facebook, YouTube, LinkedIn, Twitter, etc., to receive free organic discovery and exposure for their business on these platforms. Number three, and this one's very important, targeted paid advertising. So anyone can now set up a paid advertising account with ad platforms such as Facebook or Google Ads to target their exact customer profile with ads to promote their products and services. And finally, as we all know, online consumer behavior. So the consumer adoption of the internet has accelerated rapidly, especially after the pandemic and everything surrounding that, as the vast majority of the population is online for many hours per day with increased trust for online interactions and transactions. So these are the global shifts that has enabled this direct-to-consumer new era. And that's allowing us to basically democratize business for all. So the direct to consumer or D2C model is to selling products, what the direct to investor or D2I model is to raising capital. So here we have some diagrams showing traditional product sales versus the direct to consumer new era. So the old way was that if you wanted to launch a product, you have a new supplement, you have a new type of product, what you would need to do is you would need to get it into these gatekeeper channels. And that because these gatekeeper channels, such as the large department stores like Walmart, they were the ones who had all the customers. That's where the customers went. So if you weren't able to get your products and services into one of these large department store channels, then you weren't able to actually launch your product and get it a ton of sales at scale. So that was the main problem. So these were the traditional gatekeepers. But now, because of these massive global shifts, now we've moved into the direct to consumer era where anyone can launch a product by setting up a simple website, as we can see here. So they have their product, they set up a simple website, and then their ability to utilize social media, as we can see on the top here, or utilize paid advertising as well, allows them to and enables them to basically get access to these customers, these large pools of customers, and get awareness from these large pools of customers in order to get them to interact and ultimately transact and purchase their products directly from their own website. So that is the whole concept of direct to consumer. Now, instead of having to go through these gatekeepers that decide if your product's even going to be seen or not, anyone is able to launch products, set up a website and launch their product utilizing social media, paid advertising to get awareness directly from those same customers so that they can transact right on their website and generate revenue. So that is the new era, the direct to consumer era. So as we talked about, the direct to consumer era is what the direct to investor era is to capital raising. So we have the old way where you would have an investment, you have a startup, you have a real estate deal, whatever that may be. You would need to go through the gatekeepers. You would need to go through Wall Street. You need to go through Silicon Valley VCs. You would need to go through large institutional investment firms that have all the investors in order to actually get investment for your specific venture, whatever that may be. So you'd need to go through these large institutional gatekeepers. But now, because of the same global shifts that have happened that have enabled the direct-to-consumer era, now we can take our investment venture, we can set up a simple website, we can utilize paid advertising and social media in order to get awareness directly from these investors online, keyword direct-to-investor, and we can get them to transact directly with us instead of having to go through these large institutional gatekeepers. That is the revolution that's occurring today. So what are the key regulatory milestones that have unlocked this direct-to-consumer or D2I movement? Well, it's the Jobs Act, aka the Jumpstart Our Business Startups Act. So prior to 2012, solicitation and advertising of private investment opportunities were tightly restricted. So only accredited investors, people making over $200K or $1 million plus net worth, were allowed to invest in these from an issuer's existing network. Those were the only people that were able to be approached. So you couldn't advertise online. You couldn't do general solicitation to these investors. But after the Jobs Act was signed into law in 2012, which aimed at easing these SEC regulations to help small businesses and startups raise capital, there were multiple different rules that were signed into law. So number one, Rule 506C, which enabled funds to begin general solicitation and online advertising, just general advertising for certain securities offerings, provided that all the purchasers were accredited investors and the issuer took reasonable steps to verify their accredited status. So now you're actually able to advertise your investment opportunities, your investment ventures, whatever that may be, online utilizing this 506C rule. And then also we have Reg A, which introduced mini IPOs enabling private companies to raise up to 50 million. I believe it's up to 75 million now, from both accredited and non-accredited investors. So now you have access to virtually everyone that has the money to invest, obviously, but subject to certain limitations and disclosure requirements. And then also you have Reg CF, regulation crowdfunding, which enabled non-accredited investors to participate in equity crowdfunding, allowing anyone to invest in startups and small businesses up to certain thresholds based on their income and net worth. So you have these new acts that were signed into law, such as 506C, which allowed you to now advertise online and do general solicitation instead of just approaching your existing network. So that basically opened you up to advertising to virtually anyone that was accredited. You have Reg A, which allows you to raise up to 75 million from both accredited, and now we're introducing non-accredited investors. So that opens you up to basically everyone that has the money to invest. And you also have Reg CF, regulation crowdfunding. So these were the key regulatory milestones that unlocked this direct to investor movement. So what has happened? Well, the direct-to-investor fundraising movement has been exploding, with everyday investors splitting from Wall Street, the large institutional investment firms, to invest directly into companies. So here on the left side here, we see Masterworks. So this basically democratized the ability for anyone to start investing in specifically art. And what have they been able to do? Well, they've been able to raise, hundreds of millions of dollars. They have $940 million in assets under management right now by going direct to investor. And then we also see on the right side here, Fundrise. So they basically allow you to invest in a variety of different alternative investments, such as venture, private credit, real estate. And they have over $3 billion under management by going directly to investors, allowing anyone to invest with as little, as you can see on the right side here. Fundrise allows you to begin investing in as little as 5 minutes with as little as $10. So this is the movement that's occurring right now by going direct to investor instead of large institutional investment firms where they're investing, millions, tens of millions, hundreds of millions of dollars into your investment venture. Now, virtually anyone can begin, accredited or non-accredited, depending on what a regulatory fund you're looking to set up, are able to invest into your ventures. And then we also see new school investors, such as we can see Grant Cardone here, are raising capital online direct to investor faster and easier than ever before. So now we have someone such as Grant Cardone, who has millions of followers across all the different social media platforms, 7 million followers on Facebook, million followers on Twitter or X, 4.7 million followers on Instagram. And what did they do? They were able to go direct to investor through their social media platforms, through digital advertising, in order to raise, I believe it's right around $1 billion to buy these large institutional grade properties, and now has $4 billion plus assets under management through their firm, Cardone Capital. So they were able to democratize the ability for everyday investors by going direct to investor, raising money directly from investors through Reg A and I believe 506C, in order to allow anyone to begin investing in institutional grade real estate. As you can see on the right side here, a bunch of their different portfolio properties. So new school investors are raising capital online up to hundreds of millions and billions of dollars, utilizing, number one, the social media, and number two, paid advertising. This is the new direct to investor era that is occurring right now. So this is great and all, but now the question becomes, how do you take advantage of this new democratized way of raising capital online direct to investor? Well, what we've developed is the direct to investor acquisition equation. So this equation basically represents exactly how to begin acquiring investors, raising capital directly from high net worth investors online. So at the top part of the equation here, we have the operator, and at the bottom part of the equation, we have the investment. So the top part of the equation comes onto you. So are you able to get targeted attention from your ideal investor avatar? So you need to be able to in order for you to actually acquire investors, in order for you to actually, receive investment from an investor, first off, the most important part, you actually need to get in front of your ideal investor avatar. So you need to be able to acquire targeted attention from your ideal investor avatar. That's why it's the first part here, because it's the number one most important thing. If you can't get in front of your ideal investor avatar, a qualified ideal investor avatar, then the whole rest of the equation doesn't even matter. It doesn't matter if you're great at generating trust with people. It doesn't matter if you have an incredible investment with low risk and high returns. If you can't get in front of investors, then the whole entire equation goes to zero. So that's the most important part here. And then if you are able to get targeted attention, next comes building trust. So not only do you need to get attention from these investors, get in front of them, but you also need to build trust with them. And then we move to the bottom part of the equation, the investment part of the equation. So you're able to get targeted attention from your ideal investor avatar. You're able to build trust with them, but now you need to have the investment. So you need to find an investment that has great returns or competitive returns and relatively low risk. And then if you can do both of these things correctly, you can get targeted attention, you can build trust with investors, and then you have a great investment. It's going to allow you to scale up your investor acquisition. So that is exactly how this direct to investor acquisition equation works. Number one, the most important part, you need targeted attention from ideal investor avatar. Number two, you need to build trust with those people. That is what you need to do, the operator. Then you need to bring to them a quality investment with high returns and low risk. And depending on your ability to do both of these things, That's going to determine your ability to acquire investors or get people to invest in your fund, your syndication, whatever that may be. So the most important part here, the majority of people can build trust with someone. The majority of people can find a relatively good investment with competitive returns and low risk. So what is the number one problem here? Actually getting targeted attention from your ideal investor avatar. And that's exactly what we're going to be going through in this training today and showing you exactly how to do. So let's begin with that. So how can any capital raiser leverage Google Ads to instantly begin generating targeted attention directly from qualified high net worth investors on demand at scale? Keyword at scale. Because we don't want to be doing these one-to-one, in-person networking connections. That requires a ton of our time. It's very laborious and it's unpredictable. What we want to do is utilize these paid advertising channels such as Google Ads, because number one, we can instantly begin generating targeted attention. We can instantly get in front of our target ideal investor avatar, a qualified high net worth investor on demand, because we can set up that advertising campaign immediately and instantly begin generating targeted attention from not just one person, one-to-one, one-to-many, depending on how high we scale up our Google Ads campaigns. So that's the key here. So now let's begin. What are specifically Google search ads, and how can they be utilized to generate high net worth investor leads? Well, Google search ads are normally the first. I'm sure you've seen this before. If you just type in, as you can see on the left side here, if you just type in simply invest in real estate or any keyword related to investing, you're going to see that Google search ads are normally the first 2 to 5 sponsored search result placements when someone types in a specific keyword into the Google search bar. And then what happens is each time someone clicks on your Google ad, you will be charged a fee anywhere from $1 to hundreds of dollars per click. And so the key thing here is that Google is an auction-based bidding system. So the more people that are bidding for that specific keyword, so for this example on the left side here, invest in real estate. So the more people that are bidding on that specific keyword, that are willing to spend money in order to get in front of people in the Google search results for that specific keyword, the more people that are willing to do that, the higher they're going to bid up the cost per click. So the more people that are willing to advertise on that specific keyword, the higher the cost per click is going to be. So it can be anywhere from $1, $5, $10, all the way. For the most competitive keywords, they could be $50 to $100 per click. So the important thing to understand here is, and why we absolutely love the Google Search Ads platform, is because specifically Google Search Ads, they're intent-based versus contextual advertising. So people are literally typing in the keyword of what they want to do right now, showing clear interest and intent in that specific keyword that they're typing in, such as invest in real estate. That means that they want to do that right now. They're showing clear intent and interest in that specific keyword versus just scrolling through a Facebook newsfeed mindlessly. So for impulse buy purchases, such as purchasing a small widget or an e-commerce type product, that's where the Facebook newsfeed advertising on Facebook would work relatively well, because someone's just scrolling through the newsfeed and they're like, oh, okay, well, this looks pretty cool, I'll buy this, in comparison to someone legitimately typing in invest in real estate, meaning that they're showing clear intent that they want to perform that action right now. So that's the difference in why Google search ads are so incredibly powerful, because they're intent-based versus just simple contextual advertising. Number 4 here, you can turn on Google Ads, as we talked about, and instantly start generating targeted attention and leads by the end of the day, versus something such as search engine optimization, which is where you're trying to rank keywords in the Google search results. As you can see on the left side here, we have NerdWallet at the bottom. They probably took months, maybe even years, in writing incredible content and building up their website in order to get to that very first number 1 spot for the keyword invest in real estate. But what we can do is we can turn on our Google Ads, spend some money, and we can automatically put our search result over top of this person that took months or even years to get to that point in the Google search results, that ranking. Organic social media. So as we all know, the organic reach on social media is super, super low. It's very hard to get in front of people on social media today if you're trying to build up your Facebook account, your Instagram account, whatever that may be. But with Google Ads, we can instantly start generating targeted attention. Cold calling, as we know, that's one-to-one, so that takes a lot of time and effort. In-person networking, as we all know, very similar to cold calling, takes a lot of time and even money as well, because you have to go out and actually interact with people. So these things could take weeks or even months to see any results, if any at all, in comparison to Google Ads, where we can instantly start generating targeted attention and leads. And next here, we have number 5. It's a democratized direct to investor advertising channel. So there are 0 gatekeepers involved that are determining if you can actually get seen by quality investors. You have the ability to directly access interested investors showing clear intent in that specific keyword with Google Ads to raise capital from them. It's a democratized form of connecting with investors. And then lastly here, Google search ads, once set up and optimized, are mostly set and forget with consistent and predictable traffic flow without any ad fatigue, unlike other ad platforms like Facebook, where you need to constantly be creating new ads with fresh creative angles as results die out in just a matter of days. So Google search ads are relatively simple to set up. All it is a headline, a description, a great website, and boom, you can instantly start generating targeted attention and acquiring high net worth investor leads. So that is the power of Google search ads, and that's exactly how they're used to generate high net worth investor leads. So what is the difference between Google search ads? We went into this a little bit here, but now let's do a full breakdown. What is the difference between Google search ads and traditional cold outreach, the traditional methods that people would utilize before actually getting into this direct to investor era? Well, number one, the main difference here is that Google search ads are inbound warm leads. So as we talked about, investors are literally typing in into Google the relevant keywords, showing clear interest and intent, and then they're coming to you instead of you reaching out to them, providing a variety of benefits from the transformation of situational deal positioning. So once again, these are inbound leads. They're coming to you, showing clear intent. They typed in the specific keyword. Let's say, for example, invest in real estate. So let's say we as you can see on the left side here, fundrise.com, real estate investing, start with as little as $10. So they're clicking on your specific search result, your specific Google search ad. Then they're typing in their information, their name, their email, their phone number, because they're interested in what you have to offer. In comparison to outbound cold leads, where you're doing cold outreach to investors that number one, you don't even know if they have any intent or interest to invest, let alone in your specific investment type, whether that be real estate, startups, whatever it may be. And most of the times they don't trust it, they don't know or trust you, and that creates that bad situational deal positioning where you look essentially desperate for their investment, utilizing strategies such as cold calling, SMS, in-person networking, going to different meetup events, or from your friends and family. And then number 2 here, one of the benefits for Google search ads is that investors enter the relationship viewing you as a trusted authority with a real legit company showing up at the top of the Google search results. So not spam, not a scam, in comparison to if let's say, for example, you're cold calling someone, investors have immediate skepticism upon that initial cold contact, as there is no initial rapport or info of who you even are and how you even, with the majority of them not even answering your phone and then just immediately blocking you. So I'm sure you get a bunch of cold calls, as I do every single day. And the majority of them I do not answer and then just immediately block the number. That's what I normally do, assuming that they're spam. And then with all the new technology that's happening today, especially on the iPhone, where you're seeing spam likely on the majority of these type of phone calls, I mean the method of cold calling is basically dying. So next we have number 3 here. So with Google search ads, another one of the benefits is that the authoritative deal positioning creates an environment for a much higher lead to investor conversion rate. So this is one of our KPIs, how many leads that you generate in comparison to people that actually become an investor. Because of that inbound deal positioning, it allows you to increase that lead to investor conversion rate. Much quicker deal cycles since investors have shown intent to invest now. So once again, they're literally typing into the Google search bar, invest in real estate or whatever the keyword may be, showing that they have a clear intent to perform that action right now, in comparison to with traditional outreach, that desperate initial positioning, resulting in wasting large amounts of time and money on unqualified and unmotivated leads, much lower lead to investor conversion rates, and longer relationship building cycles, since you basically have to really sell someone on why they should invest with you. Next here, and this one's extremely important, and one of the main benefits of Google search ads, which is that Google search ads are an infinitely scalable lead generation machine that allows you to set up a predictable faucet of investor lead flow that can be scaled up or down based on your operational capacity. So let's say you're spending, $100, $200 per day. You're getting, 2, 3, 4, 5 high net worth investor leads per day. Well, if you want more investor leads per day, all you have to do is scale up your campaigns to $300, $400, $500, $1,000 a day in order to really scale that up for your investor relations team. So that's one of the main benefits of this is it's one-to-many targeted attention generation in comparison to something like traditional cold outreach, which is one-to-one, which is essentially inconsistent, ineffective, and a non-scalable seller lead generation strategy where lead flow is unpredictable each month, creating extreme stress and burnout. So it's really not a sustainable lead generation strategy, especially if you're not one of these large institutional investment firms. And then finally, we have one of the main benefits for Google Search Ads as well is that you're able to future-proof your investor lead generation with this 100% legal and TCPA compliant lead generation process in comparison to traditional cold outreach, where cold calling and cold SMS could potentially be illegal depending on your state and the laws in that state. And then also non-TCPA compliant lead generation strategies where you're risking penalties of up to $1,500 plus per violation each and every day. So those are the core differences between Google Search Ads and traditional cold outreach, specifically for acquiring investors for your investment venture. So now, how do you actually set up a Google Search Ad campaign to begin generating high net worth investor leads? Well, this is our Google Search Ads investor lead generation campaign breakdown. So you have step number one, where you have to place a Google PPC ad in the search results. So prospective investors that are searching those relevant keywords can actually see your Google ad and click on it. And then once they click on that, your Google search ad, they move to step number two, which is your investor website qualification forms. This is your website. So prospective investors will land on your website. They're going to fill out the form with their contact information, answer any qualification questions, such as, are you an accredited investor? If you're doing a Reg 506C. And then also, let's say, for example, how liquid are you? What are you looking to invest? You can ask a bunch of different qualification questions, and we'll get more into that in the next slides. So then once they fill out the form, they move to your thank you page. So upon filling out the form, the investor is then redirected to your thank you page with more information on your company. And then what's going to happen is your investor relations team is going to immediately follow up with that prospective investor to get them to invest as an inbound lead. So these are the 4 steps. The Google PPC ad in the Google search results, they click onto that ad, they go to your website, they fill out your qualification form, they go to your thank you page, you call them, you set up maybe a longer form call, and then you close them on getting them to invest. That is the 4-step process of an investor lead generation campaign utilizing Google search ads. So now let's dive deeper into each and every step of the investor lead generation campaign. So number one, as we said, we have the Google search ad. You need to set up your advertisement. So the goal of your Google search ad is to stand out in the Google search results, put emphasis on your company's specific differentiated value proposition, and steal the click from all other Google search ad competition for the specific keyword. So what you need to do is not just about setting up your Google search ad. There's going to be other Google search ads as we talked about. There's up to 3 to 5 different Google search ads that they're going to be seeing. So what you need to do is you really need to put emphasis on your specific differentiated value proposition so you can get the click in comparison to all the other competition that's also advertising. So as we can see on the left side here, there's multiple elements to a Google search ad. So number one, we have the display URL. So this is going to be the URL of your company that shows in your Google search ad. So for example, we have fundrise.com, we have godlpcapital.com, we have yieldstreet.com. And then we have the headline. So this is going to be the larger primary text of your Google ad. So here we have real estate investing. Start with as little as $10. Invest in passive real estate, returns up to 13%. Invest in real estate, invest in private real estate. Then we have the description. So that's the smaller supporting text of your Google ad. So the Fundrise flagship fund has low fees and quarterly liquidity. Get started with $10. Grow your wealth with above market returns. Expert multifamily real estate investing firm. Unlock your financial freedom and create passive income. Invest in Yieldstreet real estate and let your money work for you. Get started in minutes. Become a real estate investor without the $1 million commitments. Sign up for free. Early liquidity options. Assets-based investments. And then finally, we have the extensions. So this is optional, but you can provide some supporting links for your company. So as we can see here for Yieldstreet, they have the extensions, how it works, investment offerings, active short-term notes, ready to invest. And then you can click on those extensions to go to different websites, different pages within the Yieldstreet website. So how do you want to set up your Google search ads? These are some of the copywriting tips. The number one goal here is you want to sell the click for the number one most valuable and differentiated offering to your specific ideal investor avatar, typing in that relevant keyword. So you really need to dial in on who is the person that's most likely to invest in your specific investment opportunity. So it's going to be different. Someone who's more interested in investing in real estate is going to be a different avatar from someone who's more looking to invest in something like crypto, where they're looking for much higher returns with much higher risk. Someone who's looking to invest in real estate is going to be someone who's really looking for lower risk and potentially lower returns as well. So it's a completely different person. You need to understand exactly, dial in on exactly who your ideal investor avatar is, and then you need to create your copywriting to sell the click for the value propositions that are most important to your specific ideal investor avatar. That's incredibly important. Number 2 here, your core unique value proposition. So you need to put emphasis on your unique investment vehicle and strategy to achieve desired results. So for Fundrise, as we can see here, one of their main value propositions that they're posting in their headline and also in their description is that you're able to start with as little as $10. So you can begin investing in real estate. You don't need what the traditional person believes. You don't need millions of dollars to invest in real estate. You can start with as little as $10. So that's the core unique value proposition that they're proposing to their ideal investor avatar within the Google search results. If they're typing in Google's keywords such as invest in real estate, something like that. The investment benefits. So you want to list out your unique differentiated benefits, personalized once again to your ideal investor avatar with your specific investment vehicle. So as we can see on the left side here, something like GoDLPcapital.com, they're really talking about the returns up to 13%. So someone investing in real estate, normally you're going to see, around 8 to 10% return. Well, their returns are up to 13%. So that's one of their core investment benefits, is that they're offering, relatively high returns in comparison to the competition. Next here, we have ease and speed. So you want to describe the simplicity and speed to achieve the desired benefits from your investment vehicle or strategy. So we're going to talk about this a little bit further into the training here, but people are looking to get the desired results from whatever your solution may be in the easiest and quickest form available. So that's why, an example of this would be Fundrise.com. Start with as little as $10. That's something that's very easy to do. As you can see here for Yield Street, sign up for free, get started in minutes. They want to display to you that getting started with them is simple, easy, and you can get it done quickly. That's very important. And then next here, also very important, is your social proof and reputation statements. So you want to display short credibility and social proof statements to build trust with prospective investors that you can actually provide them the desired result. So that's also incredibly important. And then lastly here, you want to give the call to action. So you want to include a relevant call to action to tell prospective investors to perform the desired action to receive the deliverable or the benefit. So sign up for free, get started in minutes, start with as little as $10. You want to give them the direct call to action to click on your advertisement and exactly what's going to happen next. And then also you want to make sure to include your relevant keywords into your Google ad placements, because that's going to help your positioning in the Google search results. They want to see that the actual keyword that a person's going to be typing into the Google search results is actually showing up in your Google search ads, showing that it's more relevant. So that's why you see Yield Street, for example, it looks like they're trying to plug in a bunch of different keywords, such as asset-based investments. So that would be something that a potential person would be typing into the Google search results. So they want to make sure to have that in their description so that they can their advertisement is going to be shown for that specific keyword. So those are some Google search ad copywriting tips. That's exactly how to set up your Google search ad. And once again, the goal is to stand out, put emphasis on your company's specific differentiated value proposition, and then steal the click from all the other Google search ad competition for the specific keyword that they're typing in. That is the key to your Google search ads. Then step number 2, we have our investor lead generation campaign is the investor website qualification form. So the goal of your investor website qualification form is to build trust and authority with the prospective investor that has now clicked on your advertisement and has come to your website. You want to provide more details on your specific unique value proposition behind your specific investment strategy now that you have them on your website, and there's a lot more room to educate them on whatever your investment strategy is. And then finally, you want to get them to type in their contact information, their name, their email, their phone number, and potentially also their address, and then also answer these qualification questions such as, are they an accredited investor? What is their liquidity? What is their experience in your investment strategy? How much are they looking to invest? Whatever your qualification questions may be, and then ultimately become a lead in your pipeline that your investor relations team can follow up with and get them to invest. So now we're going to move into your optimized website qualification form elements. So the number 1 element to start off is your header. So you must include the header, which is just going to have your logo on the left side, then also a call to action for your company's phone number and email address. You do not want to use specifically for your landing page that you're going to be sending people to for your investor website qualification form. You do not want to have a navigation menu, because you do not want to be sending them to different pages. You have one single goal on your qualification form landing page, which is to acquire their contact information so that your investor relation team can follow up with them. So you do not want to have any ability for them to click off of or get away from your desired goal, which is to acquire the lead. Then number 2, you have your headline section. So this is the most important part. You want to include a headline and a subheadline that clearly and directly attracts your ideal investor avatar to your specific investment strategy or vehicle, and give a call to action to fill out the lead qualification form. So the majority of people are going to skim through your website very quickly. So you want to make sure in your headline section that your headline, your subheadline, which they're going to see first, directly attracts them and ultimately gets them to fill out your lead qualification form. And then next you have the lead qualification form. So you want to include a clearly visible and good, make sure it has a good user experience lead form with fields for all your contact information, as we talked about, their name, their email, their phone number, and potentially also their property address, plus any qualification questions such as, are they a accredited investor? What is their liquidity? What is their experience? How much are they looking to invest, et cetera, et cetera. Then next, you want to have the qualification stats bar. So this is something that we normally like to include. It's basically just a bar under the headline section, which allows you to build trust and authority with credibility stats such as, what is your current assets under management? What is the number of investors in your fund right now? What are your historical returns? So it's just an easy way if a person's skimming through your website in order to display credibility of the most important stats of your specific syndication fund, whatever it may be. Next is going to be your unique investment thesis explanation. So you're going to explain step by step exactly how your unique investment thesis works in simple layman's terms, so prospective investors can fully understand everything involved that you're doing in order to achieve the desired benefits, the returns, the other benefits that are included in your specific investment strategy. Next, you're going to obviously lay out your investment strategy benefits. So you're going to list out all the differentiated benefits personalized to your ideal investor avatar that they'll be able to achieve from your specific investment strategy. And then next, we also like to do this, which is include a comparison chart. So you're going to add a comparison chart that compares your specific investment strategy to other traditional investments of interest to your ideal investor avatar to position your investment as the number one solution. So you really want to basically position your investment as the number one ultimate solution to your ideal investor avatar, because your ideal investor avatar is most likely looking at multiple different investment opportunities. They're looking at stocks, they're looking at traditional investments, and you want to display to them why your investment strategy is the best, why your company is the best to invest with. That's incredibly important. Then next, you want to include some more social proof. So you want to display some investor testimonials or reviews. So add videos or written testimonials from investors in your fund, your syndication, whatever that may be, or other forms of social proof to establish trust with prospective investors from hearing about other great third-party experiences of people that have invested with you. Next, you want to include the About Us section, which is, so you're basically going to want to display headshots of your team, all the people that are involved in your team, all of your employees, your partners, everything like that, plus also a short paragraph about the story of your company, any unique value propositions offered, and any other info to build rapport and trust with prospective investors. So for your team, I would include a short paragraph of their credibility. That's also incredibly important, their experience in your specific industry. Then lastly here, you want to include the frequently asked questions. So answer all the biggest questions that a prospective investor may have about your unique investment thesis, company, and next steps to getting started. And then obviously you need to have the footer. So you want to include your terms and conditions, your privacy policy links, and then also the proper Google ads or financial disclosures for your investment strategy. So those are all of the website qualification form elements. And then lastly here, obviously it's incredibly important, if you don't already know, you want to make sure to optimize your website for mobile, as the majority of prospective investors will be viewing your website from a Google ad, specifically on their mobile phone. So that's incredibly important. So that is step number 2 of your investor lead generation campaign. Now we have step number 3, which is your investor website thank you page. So the goal of this page is to provide clear confirmation that their form has been submitted. They will receive any deliverables. So if you allowed them to get a lead form of lead magnet, like a PDF, something like that, you want to tell them that they're going to be receiving that in their email, and then also that you're going to be getting back to them ASAP. So that you can, the main goal of the thank you page is to further build trust and rapport for your company before the call. So that's incredibly important. And then optional as well is you can also give them the ability to actually schedule an inbound introduction call with your investor relations team. But what you want to do is you want to make sure to position the call as something of value. So it's not just schedule a call to speak with our investor relations team. It's, for example, get a free wealth consultation strategy session. You need to make it seem like it's actually something of value. It's not just a sales call. That's incredibly important. Then, so next we'll go into the layout of your thank you page. So just like the website, you want to make sure to have your header. So you must include your logo and then also a call to action for your company's mobile phone number and email address. The main section. So for the main section, you want to provide confirmation that the lead form was actually submitted and you're going to be following up with them ASAP so they know that. You also want to display to them what comes next. So you want to explain the next steps of your process through text or video. We normally like to use a video in this section so that you can pre-frame prospective investors, build a connection with them, build rapport and trust with them once again on everything involved with your unique investment thesis and the overall process to getting started investing with you. Next here, we have more testimonials and reviews. So show more video or case study interviews, Trustpilot reviews, etc. from investors to build trust. You want to include the About Us section again. So display headshots of all the members of your team with short credibility descriptions of each person, plus a short paragraph about the story of your company to further build rapport and trust. Maybe they didn't do that on your on the initial website qualification forms. You want to make sure to include that again, and also include the frequently asked questions section again. So you're going to want to answer all the questions that a prospective investor may have about your unique investment thesis, your company, and the next steps of getting started. And then finally the footer. So you're going to include your terms and conditions, your policy links, everything surrounding that, and then also the proper Google Ads and financial disclosures. And also something that we like to do, this is our phone call contact rate optimization tip. So you want to, we normally like to add an immediate automated SMS text message once they actually opt in through our lead form on the first page to the investor's phone number upon completion, congratulating them on starting the process, providing your name in the actual text message to establish rapport and introduce yourself, and telling them that this is the phone number that you're going to be calling them from. So that what normally happens is it's going to show a maybe. I'm sure you've seen this before. If some random person texts you and then they call you, if they have the name in the actual text message, it's going to show when you call them, it's going to show maybe and then their name, which will help improve your contact rate. So they know that's not just some random person calling them. And it shows like spam likely or something like that. So that's normal what we like to do as well. So that's going to be your investor website thank you page. So here's just a recap once again of our Google Search Ads Investor Lead Generation Campaign breakdown. So step number 1, we have the Google PPC ad. So you're going to place your Google PPC ad in the search results so that prospective investors searching for those relevant keywords can see your advertisement. You're generating that targeted attention. Then they're going to click on your Google search ad and they're going to move into your website qualification forms. This is where prospective investors are going to land on your website. They're going to fill out your contact form with the proper contact information, their name, email, phone number, and then potentially also their property address. And then they're going to answer any qualification questions. Let's say, for example, are they an accredited investor? How much do they have to invest? How much are they looking to invest? What is their experience in your investment strategy? Questions such as that. Then once they fill out that form, they're going to move to your thank you page. So they're going to, you're basically going to confirm to them that they filled out the form. You're going to be getting back to them ASAP and then providing them more information on your company. And then ultimately your investor relations team is going to follow up with them and get them to invest. That is our 4-step strategy. Okay, so now that we've done a complete breakdown of a Google search ad campaign, the very first element that we must complete before launching the campaign is actually finding the most relevant keywords to target with our ads. So here are the top 4 best strategies to find relevant Google search keywords for your campaign. Number 1 is going to be utilizing the Google Keyword Planner. So this allows you to discover relevant keywords for your campaign by typing in a base keyword such as real estate investing. As you can see on the right side here, this is the Google Keyword Planner where we typed in real estate investing. And then what that allows us to do is find related and longer tail keywords that we can then utilize to target with paid ads. So as we can see on the right side here, some example related keywords to real estate investing would be REIT. So real estate investment trust, that gets anywhere from 10,000 to 100,000 average monthly searches. So that would be a keyword that we would potentially want to test in targeting with advertising. We have REIT investing. We have real estate investing for beginners. That's also getting anywhere from 10,000 to 100,000 average monthly searches that we can target with paid advertising. We have property investment for beginners. That would be a good one as well. We have investment property. We have real estate investors near me, so self-directed IRA real estate. So that gets 1,000 to 10,000 average monthly searches. So these are all relevant keywords that we can then target with paid advertising, because if someone's typing in, REIT investing, that would be someone who would potentially be, if we were launching some form of real estate syndication, some form of real estate fund, REIT investing could potentially, or for example, property investment for beginners, real estate investing for beginners, those could potentially be good keywords for us to target with paid ads, because people who are typing in those things could potentially be interested in investing in our fund, investing in our syndication, whatever that may be. So that's just an example of one strategy. Another strategy that we can utilize is by utilizing a competitor Google ad keyword spy software. So what this allows you to do is essentially spy on your target market competitors' entire Google ad strategy. So their exact keywords that they're targeting, templates, the exact ad templates that they're utilizing by using these competitor research softwares such as spyfood.com. So basically what you can do, let's say you're a real estate, you're launching a real estate syndication, you want to start targeting relevant Google search keywords for that. What you could do is you can look at who's my biggest competition. Let's look at, for example, fundraising.com, something like that. Whatever your biggest competitors are, you can literally type in their website, and then it's going to find the exact keywords that they're targeting with their Google ads. And then not just that, but also the exact ads that they're utilizing, so that you can model their ad templates that they're utilizing to advertise in the Google search results. So that's just another great way to find great keywords to target with paid ads. So we're going to be going into exactly how to utilize all of these in real time. We're going to be doing like actual real life scenarios, but just to give a complete breakdown at a high level, I just want to go through each one by one, and then we'll go into each of these more in depth. So next we can do Google related searches. So what you can do is you can type in the base keywords into your actual Google search bar, just like if you were going to search those up for yourself. And then what you can do is normally you're going to see a pop-up of all the related searches at the bottom of the page. So this is just another great way to find longer tail, low competition keywords to target. Just by simply typing in the base keywords such as real estate investing into your Google search bar, and then you're going to see a bunch of other related keywords show up. And if they're showing up first in that pop-up of the related searches, then you know that those are searches that are being that are also being searched in relation to your main base keyword. So that's just another strategy that you can utilize, underutilized strategy. And then lastly here, this is a relatively new one. You can utilize ChatGPT to do AI keyword brainstorming. So you can type in all the relevant info about your investment strategy and company, and then you can prompt ChatGPT to brainstorm the most relevant keywords to target with your Google search ad campaigns. So these are the top 4 best strategies to find relevant Google search keywords. So once you've compiled a list of all the keywords that you would like to target with your Google search ad campaigns, the next concept that you need to understand is something called keyword match types. So people will normally type in not just your main keywords into the Google search bar, but also a variety of different variations of those keywords. So basically what Google allows their advertisers to do is input a match type for the keywords they're looking to target into their Google ad platform, so that their ads will show up in the search results for not just those main keywords that people type in, but also the potentially relevant searches. And what this allows you to do is just get a lot more traffic to your campaigns in comparison to just the main keywords that people are typing in. So for example, let's say someone types in the keyword real estate investing. If they utilize the broad match type, it's going to show not their ads to not just people who type in real estate investing, but also a more broader range of keywords that are associated or relevant to that keyword, such as real estate investment trust or other more broadly relevant keywords to that main keyword. So it's going to be the least specific relevant keywords to the keyword that you would like to target, which just allows you to get a lot more traffic at potentially also a lower cost. But the only issue with this is it's going to be less qualified or less potentially interested people that you're getting clicks from. So that's the only issue there, is that these could be potentially less qualified or less interested people because it's a more broadly relevant keyword that you're targeting. So next we have medium specific. So this is going to be your phrase match. So this is going to be people that are a little bit more relevant. It's going to also target your ads to people that are a little bit more relevant than the broad match, but still a little bit less relevant from your overall main keyword that you're inputting into the ad platform. So for example, let's say you input into their ad platform real estate investing with the phrase match type. What's going to happen is they're also going to show your ads to people who type in a little bit more relevant keywords such as real estate investor. So not just real estate investing, it's also going to show your ads to people who type in keywords such as real estate investor. So you can also get those people to click on your advertisements. And then if you really want to dial it in, so you're only showing your ads to the most relevant people that are typing in that main keyword of real estate investing, you can utilize the exact match type. So if you input into their Google Ads platform real estate investing, it's only going to show your ads to people who type in different search terms such as investing in real estate. So super, super relevant, or that exact match of the input keyword that you type in real estate investing. So that's basically how keyword match types work. You can choose broad match if you want to get a lot of traffic from more broadly relevant search terms to that overall input keyword that you typed into the Google Ad platform. You can use phrase match to get a little bit more targeted, or you can choose exact match if you want to only target people with your Google search ads that have specifically typed in that input keyword into the Google Ads platform, or super relevant keywords that are to that input keyword. So that's how keyword match types work. And once again, we'll be going into the actual Google Ads platform and setting up these campaigns, so you'll see exactly how to set everything up in real time in a real life scenario. But just to give a broad overview here at a high level, so you somewhat understand exactly how this works and can do this for yourself. So now that we actually understand how to brainstorm keywords, let's actually do a live breakdown utilizing these strategies to actually find your relevant keywords. Okay, so to start off, we have the very first of our 4 keyword research strategies. And as you can see here, we're in the Google Ads Keyword Planner. So all we have to do to start off is click Discover New Keywords. And then we have 2 different options. We can type in a root keyword, or we can also, if we have any competitors' websites that we would like to utilize to research keywords, we can also type in their website URL right here and then find different keyword ideas that way. So there's multiple different strategies. Let's just start off going with the keyword research strategy. So we can type in our root keyword, let's say, for example, real estate investing, click get results. And then we're going to see multiple different related keywords to real estate investing. So as you can see, keywords you provided, real estate investing, and then below we have multiple different related keyword ideas. So we have REIT, we have REIT investing, and then we have a bunch of other keywords. And then we also have the monthly searches that each keyword's getting. So you can see here there's a bunch of traffic, a bunch of average monthly searches, around 10,000 to 100,000 for REIT. And then something great that they also do is provide you the competition of the keyword specifically for Google Ads, and then also the prices of the traffic. So you can see if the specific keyword is low competition, and then also you can see exactly how much it's going to cost you in order to get a top of page bid, which means what it's going to cost you on average to place your Google search advertisement at the top of the page per click. So it would cost around, if you wanted to bid on REIT, that specific keyword, then it would cost around $7.65 for a top of page bid. That would be the highest quality traffic, obviously, since it's at the top of the page for that specific keyword. Then we have REIT investing, so we can see that has around 10,000 to 100,000 monthly searches, relatively high cost per click. But once again, if it's a more targeted keyword, that's okay if it's a high cost per click, because the majority of those clicks are going to be qualified people that could potentially invest with us. So you have to take that into account as well. So let's just filter by average monthly searches. So as you can see here, real estate investing for beginners also has 10,000 to 100,000 average monthly search, low competition, and then a little bit lower cost per click. So this could potentially be something we want to, a keyword we want to test out as well. Property investment for beginners, 10 to 100,000 angel investors. That could potentially work. Investment property, so that's only 1,000 to 10,000, but a little bit lower top of page bid. Real estate investors near me, best REITs to invest in. So this is a lower level keyword. This is someone who most likely is getting ready to invest. This person has intent. That's why these longer tail keywords are good to utilize, because if someone's typing in best REITs to invest in, that's a longer tail keyword, and someone who's actually has more intent an interest in potentially investing. So based on this keyword right here, best REITs to invest in, this is someone who's really looking, who's really dialing in exactly who they want to invest with. So this would be a great keyword to potentially utilize. investment property for sale, and real estate investment companies. Once again, this is an intent-based, a great longer tail intent-based keyword, because this is someone who's really dialing it in at the bottom of funnel, a person who's actually not just interested in, let's say, for example, not just typing in REIT investing, but they're going even farther now. They're not just typing in real estate investing for beginners. Now they're really dialing it in and saying, okay, what are the best real estate investment companies? I don't just want to know about real estate investing. I want to know what are the best companies, because I'm dialing in exactly who I want to invest with. So that's the way you have to look at these more longer tail keywords. They have less traffic, yes, but they're definitely more targeted traffic. Rental property for sale, house investors, fundrise, real estate. So this would be a branded search keyword. REITs to buy. It's another one. Lower amount of average monthly searches. $6 cost per click. Real estate investment groups. $8 cost per click. Best real estate investment funds. So once again, lower funnel, more targeted. Getting ready to actually make the investment. $6. So that's exactly how you would want to do things. Just type in the root keyword, and then you can find all the related keywords and just add that to your list. So you can begin targeting those with your Google search ads. So that is the Google Keyword Planner. Now we can go to one of my favorite strategies personally, which is going to one of these spy softwares, competitor spy softwares, such as spyfoo.com. So you can type in any of your competitors' URLs. So for this example, we're using Fundrise. This is basically a very large alternative investment platform. So as you can see here, we typed in the exact URL. Now it's giving us a bunch of different information, exactly what keywords they're ranking for, the estimated monthly SEO clicks, what's their organic traffic compared to their paid traffic. So they're currently running around 1,525 different paid keywords. And then once you go all the way down here, you'll be able to see all of the keywords. So here's a couple different, they're running their branded search keywords: AI startups, Series D funding, invest in startups. Then you can also see the recommendations: invest in real estate. That's a good root keyword. Accredited investor investments US. Multifamily investment groups that purchase value add Class C properties. See, this is a super longer tail keyword. It's still getting around 400 searches per month. But once again, this is a lower funnel keyword. This is someone who's really dialed in on exactly what they want. It has higher intent. So these type of keywords may have less people searching them, and they may cost more money. But overall, this is a person who's at the bottom of the funnel. They're not just someone typing in invest into real estate, the root keyword. This is someone who really knows what they're looking for and is getting ready to make an investment. So those are great longer tail keywords to utilize. So as you can see here, now this is the best part here with Google Ads history. So you can see the actual keywords that they're targeting, exactly how much money it's costing them, the cost per click, how many clicks they're buying per month, an estimation of that around 9,000. And then you can see the actual copy that they're running, the actual ad templates. So start with as little as $10, real estate investing, and then their description. So you can see all of that information. And as we talked about, a great competitor analysis strategy to come up with advertisement ideas is to go to the people who are at the top position for the different specific keywords, and then kind of modeling exactly what they're doing for their advertisement. Because if they've been running this for a relatively long amount of time, that means that they're seeing success, they're profiting. So this would be something you could potentially start with to have some form of proving converting copy, and then put your own unique twist on it to outcompete them. That's exactly what you want to do. So that's pretty much the SpyFoo way of researching different keywords. Just type in your different competitor keywords, and you can basically spy on any competitor that you like. Also, if you want to get the paid version, you can do that, but the free version definitely gives you some good insight. So that's number 2, SpyFoo. And then number 3, this is a very simple way of doing things. So you just basically type in your root keyword into the Google search bar, such as real estate investing, the main root keyword. You can see there's all the sponsored advertisements right here. And then what you want to do is go to the related searches. So you can see all these related searches right here. So these are similar to the Google Keyword Planner, but these are lower competition because everyone's using the Google Keyword Planner. Everyone's using the SpyFoo software, but not that many people are actually using the Google related searches. And this is actually what Google's giving you. They're telling you these are the related searches that people are interested in, that are typing in real estate investing. So real estate investing for beginners, how to invest in real estate with no money, real estate investing app, real estate investing strategies, real estate investing books, real estate investment trust, real estate investing Reddit. So these are just different related searches that people are typing in that have typed in the root keyword real estate investing, that you can potentially add into your keyword search ideas to target with your Google search ads. And then we have the final strategy here, which is utilizing ChatGPT. So the prompt that you want to type in right here would be this exact prompt right here. We'll make sure to put this in the description or whatever in order to allow you to basically just copy and paste this. So for example, this basically just says identify the most effective and optimized keywords for generating high quality accredited investor leads for a high real estate investment fund. So that's our example here. You can basically just plug and play whatever your fund is going to be, or your syndication, or whatever your investment venture is going to be. And then it says focus on keywords that accredited investors are likely to use when searching for investment opportunities, financial growth, and secure real estate ventures online. So we can use ChatGPT to find the best keywords for us. So let's type in send message. So here's a bunch of different keywords that we can basically just copy and paste, find the best ones. And then if you want to iterate and kind of work with ChatGPT, prompt it a little bit more to really dial in on exactly what you want them to find for you, you can do that as well. But this is just a great way to get some brainstorm some different ideas utilizing AI and the power of ChatGPT. So that's exactly what you can do here. Private real estate syndications, high net worth real estate investments, accredited investor opportunities. That could be interesting. That most likely has a good amount of traffic. Accredited investor real estate funds. List out 10 more keywords that are longer tail. See, longer tail keywords are more specific. Tax benefits for accredited investors in real estate. Diversify portfolio with private real estate funds. High yield real estate investments for accredited investors. That could be interesting. Accredited investor access to exclusive commercial properties. Passive income opportunities in real estate for accredited investors. Accredited investor exclusive access. Brainstorm more bottom of funnel keywords where people are narrowing down options to make an investment so that we can show ads, our search ads, to people who are nearing making a decision of where they want to invest their money into real estate funds. Bottom of funnel keywords are crucial for targeting potential investors who are in the final stages of their decision-making process. That's where we want to, that's a great way of really, as we talked about, dialing in the people who are most likely to be making a decision with urgency right now. So this is a good one right here, using best. So best real estate funds for high net worth individuals. This would be someone who's narrowing down before they make their final decision. Review top real estate funds for accredited investors. That would be a good one. Real estate fund minimum investment requirements. This one would be a good one. Top performing real estate investment funds for accredited investors. That's a great one right there. So these three right here, when they're utilizing keywords like this, top or best or compare, review, these are all good, more bottom of funnel type keywords. So those are the four strategies. You can utilize the keyword planner. You can utilize the SpyFu competitor research software. You can utilize Google's own platform, just find the related searches. And you can also utilize ChatGPT to really curate the best list possible of different keywords that you can target with your Google search ads, put them all into a list. And then in the next section here, we'll learn exactly how to start targeting these and put them into your campaigns. Okay, so now that we've compiled a list of all the keywords that we would like to target with our Google search ad campaign, the second element that we must complete before actually launching our campaign is selecting our most profitable keyword bidding strategy. So this is the way that we like to set up our automated bidding strategies for different keywords in our search campaigns. So basically, just to give you a high level breakdown, Google's advertising platform, as we talked about, runs on a self-serve auction-based bidding system, meaning that any person can come onto the platform, become an advertiser, and bid for the traffic for a specific keyword. So the key thing that you need to understand here with this auction-based bidding system is the more advertisers that are bidding on a specific keyword, like real estate investing, for example, the higher the cost per click is going to be on average for that specific keyword. So there's two different bidding strategies that we can utilize. Number one is going to be maximize conversions. So when you select the bidding strategy maximize conversions, Google is going to algorithmically optimize your bidding strategy for that specific keyword to maximize the amount of your desired conversion action. So you're telling Google to go out and get as many conversions as possible, so as many leads as possible at virtually any cost. So you're telling Google to go out and outbid all of the competition so you can get as many conversions as possible. So that's bidding strategy number one. Bidding strategy number two is something called target CPA. So when you're utilizing the target CPA bidding strategy, you're telling Google to go out and algorithmically optimize your bidding for the specific keyword to once again, maximize the amount of your desired conversion actions, such as leads, but now you're setting a maximum cost per conversion. So for example, you're telling Google to get me the maximum amount of conversions at X price. So that's basically how you're setting it up. So instead of just telling them to go out and spend as much money as possible on the bids, now you're setting a target level that you're not willing to go above. So let's say you set it at $45. You're telling Google, get me the maximum amount of conversions at $45. I'm not willing to spend any more than $45 per conversion. So now you're setting a limit, because what happens, and this is basically, we're going into this next, or our recommended strategy, but basically what happens is when you don't give them that set limit, they're gonna go out and spend as much of your money as possible to get as many conversions as possible, which could potentially be a problem, because if you could spend $45 per lead, but you set the maximized conversions objective, and you end up spending $100 per lead just to get as many conversions as possible, that's a problem, because you're overspending. So our recommended strategy, which is going to save you a ton of money based on actual experience. So what happens is most experts and agencies, what they recommend you to do is start with the maximized conversions bidding objective until you get around 20 to 50 plus conversions, and then finally switch over to target CPA. But after over $1 million in advertising spend, we found that this is completely incorrect, and it's just going to result in you, wasting a ton of money, because of the fact that this creates a super high, as we talked about, cost per lead, especially with specifically investor leads that already have a high cost per lead, because these are high quality people, which just results in a death spiral of wasting a ton of money. You end up getting less leads and also less optimization, since you'll get less conversions at that higher cost per lead. So that is the biggest problem. So what we recommend you to do is start by estimating the low end target CPA of a lead conversion action. So for example, let's say that you can go out, the average cost per lead for investor lead generation, depending on the keyword that you're targeting, could be anywhere from $50 to $100 per lead. So we would start at the low end there at around $50 per lead. So you don't end up overspending. And then what you're going to do is based on the amount of spend. So if you have let's say, for example, if you're setting your daily ad budget to $100 per day, and you're seeing that you're not spending all the way through, you're not getting any clicks, that means that your bid isn't high enough. You're not outbidding anyone, so they're not going to give you any traffic, because as we talked about, it's an auction-based bidding system. So then what you're going to do, if you aren't getting any traffic, you want to increase the bid just a little bit. So instead of $50, now set it at $60. Wait a day, see if you actually spend through your entire daily budget. And if you do spend through your entire daily budget, that means that you're at a good equilibrium point where you're not overspending and you're not underspending and not going to get any traffic. So that's the way that you want to do things, so you don't end up wasting a ton of money, because you want to give Google and any advertising platform that you're running on, this is what we found based on actual experience, you want to give them the least amount of control as possible, because Google and any advertising platform is optimized to spend as much of your money as possible. That is what they're optimized for. They want to make as much money as possible off of you. So you need to actually take back the control, as much control as you can have, to tell them, no, you're not going to overspend all of my money. I don't want you to go out and I don't want you to go out and spend any more than this set amount for a conversion. That's what you need to do. So you're just going to adjust your bid depending on your volume of spend, the amount of impressions you're getting, the amount of clicks on your ad. And then if it's not spending through your daily budget, then increase the bid a little bit. But if you are spending through your daily budget, that means that you're at a good equilibrium point. So you just need to find that equilibrium point. But once again, do not let them overspend for your leads, because that's just the biggest problem that we found. So that's exactly how you want to set up your bidding strategy. And once again, we're going to be setting all this up in the actual ad platform, but just to give you a high level here before we actually do that, so you understand our overall strategy. So next, once you have the bidding strategy down, now the third element of launching a Google search ad campaign is designing your perfect, highly converting Google search ad. So here are our core principles to a highly converting Google search ad, not just a highly converting Google search ad, but just copywriting in general. This is the way that you want to set up your copy for anything that you're going to write on your landing pages, for your Google search ads, Facebook ads, whatever kind of marketing material that you're doing. In order to get someone to actually convert, this is the way that you want to set up all of your marketing material. So the core principle here is that people want a new way to easily achieve the best desired result in the fastest manner possible for the lowest cost possible with zero risk. Any product that you can create that fits this principle is going to explode, because this is exactly what gets people to convert. This is what gets people to buy. This is what gets people to invest. This is what gets people to click. This is how you need to set up all of your marketing material, utilizing this single quote right here. So now I want to go into each part of this quote so you can fully understand why this helps convert so much. So core principle number 1 is new. People want a new way because people have low confidence. They've already tried virtually every single way to achieve a desired result, and virtually none of them have worked for them. If you don't give them a new way or a new twist to an existing way that they've never tried before, then unfortunately, they will almost always automatically instantly disregard our ad, because this is very important here. New equals hope that it will work. So for example, let's just use the supplement industry, for example. Every single person has tried multiple different supplements in order to lose weight, and none of them have worked, or they've worked only a little bit. But so if you try to sell someone the same exact supplement that has the same type of ingredients in it, people are going to look at that and they're going to be like, oh no, I already tried that. It's not going to work. It didn't work, or it barely got me any results. But if you come to them with something that's new, with new ingredients, a new formula, a new proprietary formula, and then give them the benefits that they're going to get from this new proprietary formula, it gives them hope because it's new. This is a new thing that will actually work this time, and then they buy. So it's very, very important when positioning any of your any investments or any product in general as something that's new, because that gives them hope that it will actually work. And it gives them that believability as well that it will actually work. So that's core principle number 1. Core principle number 2, obviously, is they want something that's fast and easy, because people want instant gratification. They've been programmed for instant gratification, especially with social media, when they're getting those instant dopamine feedback loops. So the faster and easier you can make it to achieve a desired result, the higher the value of that product, that service, that investment is, and the more likely someone will actually choose your ad over the other ones in the search results. Basically, what people want is a one-click push button result. That is the goal. So when you're creating your marketing material, you want to make it seem not just that the ability to achieve the benefits from your investment is fast and easy, but also the ability to get set up. So that's why in the previous advertisements that we looked at, the majority of them in those ad templates for Fundrise or whatever that may be, they say get started in minutes with as little as $5. That basically displays them. It's very simple to get set up. You can click this ad and get set up immediately. Just download the application. It's going to take a couple minutes to get started, and then boom, just invest with $10 and you can get started. It's that easy. So that's why they utilize that, because the number 2 principle, fast and easy. People want a new way to easily achieve the best desired result in the fastest manner possible. Incredibly important. Core principle number 2 is value, obviously, because people want to be able to achieve the highest amount of value or benefits from your specific solution. The higher the differentiated value that can be achieved from your specific solution compared to your competition, the more likely someone will choose your ad over others. So you need to go through and you need to do a full competitive analysis of everyone that's bidding on your specific keyword that you're going to be competing against in the Google search results. And you need to see what is the value proposition that they're displaying. And then you want to put your new unique twist on it, and then also display the differentiated value that is better than all of the other competition, utilizing your new unique twist or way of achieving that benefit. So that is core principle number 3, value. Obviously, you need to show them why they're going to be able to achieve the highest amount of value and benefits for your specific ideal investor avatar, personalized to your ideal investor avatar. That's incredibly important. The things that they want, the benefits that they want, and then show them why your specific solution will help them achieve those desired results. Incredibly important. Then we move on to core principle number 4, cheap or free. People are cheap, obviously, as we all know. So the lower you can get the cost of your solution to zero in terms of price, time, and savings, the higher the value, and more likely someone will choose your ad over others. So that's very simple. And then core principle number 5, trusted. So people are super skeptical, especially today. They trust no one, especially on the internet. So the more proof that you can provide that your solution will provide them desired results with guarantees, social proof, testimonials, authoritative figure endorsements, everything like that, just as much social proof as you can give them, the higher the value and the more likely someone will choose your ad over others. A guaranteed result is the goal. So you can provide your track record, your IRR, your historical IRR, your historical returns, everything like that. That portrays great trust with people. So once again, the 5 core principles in this single quote right here, in all of your marketing material that you create, it needs to abide by this single quote right here. People want a new way to easily achieve the best desired result in the fastest manner possible for the lowest cost possible with zero risk. That is what's going to get someone to click. That is what's going to get someone to opt in on your landing page. That is what's going to get someone to ultimately invest in your venture. That is how you need to position your advertising. So here are some examples of investment niche Google search ads, so you can kind of get an understanding of how this is actually utilized in a real life scenario. So real estate investing, as we talked about before with Fundrise, start with as little as $10. Very simple, very quick, very easy. That is what it portrays in that advertisement. Invest in passive real estate, returns up to 13%. So they're doubling down on the value of their investment. Returns up to 13%. Those are good returns, especially when they're competing against other real estate funds that may have likely not been able to achieve as high of returns as those. What do we have next year? Invest in real estate, invest in private real estate. Become a real estate investor without the $1 million commitments. Easy. Invest in Yield Street and let your money work for you. Get started in minutes, fast, sign up for free, lowest cost opportunity, because people want something that's cheap. Very, very simple. High annual returns, invest in properties online, offers unique investment opportunities in institutional quality real estate. What do we got next year? Works with accredited investors to fund new apartment projects, diversify your portfolio by contributing as little as $100,000. Then down here, another Yield Street, fractionalized real estate. That's their new way of achieving the desired result. Fractionalized real estate. You can get started in minutes, sign up for free. So in every single advertisement, you want to display our exact quote that we just went through. It's incredibly, incredibly important. New way to easily achieve the result in the fastest time possible, a guaranteed way for the least amount of money as possible. That is what people want, the best result possible. So that's how you need to portray your advertising. And you're going to find, these ads are decent, but you can definitely outcompete these advertisements if you have good copy and you abide by our main quote that we just went through. That's incredibly, incredibly important. So as we talked about, you want to go through and do a full competitor market research. So the number one easiest strategy for beginners to instantly create conversion optimized Google search ads is to simply just model the top position ads, because if they are the top position ads that you're seeing in the Google search results for whatever specific keyword you're looking to bid on, that means that they are successful, because they wouldn't be in the top position if they weren't successful. That means that they've been up there for a good amount of time and people are spending a lot of money on those advertisements. So you want to first off model those advertisements if you just want to get started very quickly with something that's converting, but you don't just want to copy it word for word. You want to add your own unique twists on it that abide by our marketing material quote, so you can display your own unique twist, your own competitive advantages to further differentiate yourself from those ads and show why you're the better, you have the better opportunity. That's what you need to do, so you can steal the click directly from them. So as we talked about, the top position search ads in the Google search results equal the most likely to be profitable, or they wouldn't be running them for an extended period of time with the highest bids. So this is just a great way to get started very quickly. So lastly here, and the fourth element of launching a Google search ad campaign is actually planning out your KPI metrics to hit your capital raising goals. And this is the number one mistake I see of beginner Google Ads advertisers, not just in the investment niche, but literally across every single niche, whether you're selling products, whether you're selling services. The majority of beginner Google Ads advertisers, the reason that their campaigns fail is because they're not actually planning out the KPI metrics. They're not actually forecasting their campaigns to see, they're basically just running their campaigns blind. So they don't know what numbers they need to hit in every single step of their campaign in order to actually achieve their desired results. They're just running their campaigns blind. And when you run your campaigns blind, you just can't be successful, because you don't even know what's going on with your campaigns. You have no way of forecasting the actual results and then ultimately optimizing them to hit your goals. So that's what we want to do here. So it's to start off, before you can actually, break down your KPIs, you actually need to understand what they are. So here are all of the different KPIs that are going to be involved that you need to optimize in order to hit your desired capital raising goals in every single step of the campaign. So you have the first part of the campaign, which is the Google search ad. So the KPIs that are involved with your Google search ad are going to be, number one, the cost per 1,000 impressions, or your CPM. So how much do ad platforms charge you per thousand impressions of your ad? So this is going to be the total amount of ad spend divided by the impressions multiplied by 1,000. That's going to equal your CPM. And you're going to be able to see the majority of these metrics directly in your ad platform dashboard, which we're going to go into in a little bit further into this module. But just to break it down so you fully understand what each of these KPI metrics are and how they're calculated, I just want to go through this first so you have a full understanding of this. Next is going to be the click-through rate. So this is incredibly important. So how many prospects that actually view your ad impressions actually end up clicking them. So it's just going to be the clicks divided by the impressions equals the CTR. So you want to have the highest CTR possible. The highest amount of people that are viewing your ads in the Google search results, you want the highest amount of people to actually be clicking them. And the higher you can get your click-through rate, the lower your cost per click is going to be. So each one of these metrics, they all play onto each other. And that's the next metric, cost per click, the CPC. So how much does it cost you in order to get a prospect to click to your website from your advertisement? So this is going to be the total amount of ad spend divided by the clicks equals your cost per click. So those are all the KPI metrics that you can optimize that are associated with your Google search ad. And then next we move on to the next part. So now they've clicked your Google search ad, and these are the next metrics that you need to optimize, which is going to be number one, your lead conversion rate. So how many prospects that now have clicked on your advertisement, have hit your website, are actually registering with their contact information in order to become a lead. So this is going to be the amount of the leads that you have divided by the amount of clicks to your website equals your lead conversion rate. So if you have 100 clicks to your website and 10 leads and end up converting and becoming a lead, that would be a 10% lead conversion rate. And then once you have your lead conversion rate, you can now calculate your cost per lead. So how much does it cost you in order to get a prospect to become a lead on your website? So this is simply just the total ad spend divided by the amount of leads equals the cost per lead. And once again, every single one of these metrics play onto each other. So if you're able to increase your click-through rate and then ultimately drop your cost per click, but you have the same exact lead conversion rate at 10%, then you would be able to achieve the lower downstream metric with a lower cost per lead. So that's why you need to optimize every single step of your funnel, because every single metric plays onto each other. If you can drop the cost per click, you can increase the lead conversion rate, it's going to drop your overall cost per lead. And then you can move into ultimately dropping the cost of every single further downstream metric as well. So we move on to the next downstream metric, which is going to be your qualified lead conversion rate. So it's great that you're getting a ton of leads at a low cost, but what amount of these leads are actually qualified to invest? So how many leads are actually qualified based on your qualification requirements? So are they accredited investor? Whatever your qualification requirements may be, in order to calculate the qualified lead conversion rate, it's going to be the amount of qualified leads divided by the amount of total leads equals the qualified lead conversion rate. So you have 100 leads, 10 of those leads are actually qualified. That's a 10% qualified lead conversion rate. And then next you move into your cost per qualified lead. So how much does it cost in order to actually acquire a qualified lead based on your specific qualification requirements? That would be the total ad spend divided by the qualified leads equals your cost per qualified lead. And now we move on to the final downstream metrics, the most important downstream metrics, which is going to be number one, your lead to investor conversion rate. So how many prospects that become a qualified lead actually become an investor in your offering? So this is going to be the amount of investors divided by the amount of your total leads that you have equals the lead to investor conversion rate. So if you have 100 qualified leads and you have 10 people that end up becoming an investor, that would be a 10% lead to investor conversion rate. And then you have your cost per investor, or your CPA. So how much does it cost in order to get an investor in your investment offering? That's going to be the total amount of ad spend divided by the amount of investors that you have equals the cost per investor, or the CPA. And then finally and ultimately you have the return on ad spend, or the ROAS. So how much capital is raised for each dollar of advertising spend? So it's going to be the amount of capital raised divided by the total ad spend equals your return on ad spend. And that's the most important number. So those are all the KPI metrics that you need to understand in order to run any form of paid advertising investor lead generation campaign. You have the Google search ad KPIs, which is going to be your CPM, your CTC, your CPC. Then you move on to your website, which is going to be your lead conversion rate, your cost per lead, your qualified lead conversion rate, and your cost per qualified lead. And then you're moving to your investor relations team KPIs, which is going to be your lead to investor conversion rate, your cost per investor, and your return on ad spend. So these are the most important metrics that you need to understand when running your paid advertising campaigns that you can ultimately optimize to drop your ultimate downstream metrics, which is going to be your cost per investor. So you want to have the lowest cost per investor possible with your advertising campaigns so that you can have the highest return on ad spend. So now we're going to move into the actual KPI forecasting analytics dashboard. So once you actually now that you understand your KPIs, now we can actually calculate everything that's going to be involved in order to hit your desired capital raising goals. So on the left side here, we have the KPI metric calculator, and then on the right side here, we have the forecasting calculator. So you want to start off with your KPI metric calculator. So we have the cost per click. So we're going to put in all of our metrics in order to see and basically forecast exactly what our ending downstream metrics are going to be based on those KPI metrics that we have set. So for this example, we're starting out our campaign. Let's say our cost per click is going to be $10. We have a lead opt-in rate of 25%. So 25% of people that actually hit our website from those Google search ads actually become a lead. That would be a cost per lead of $40. And now let's say the accredited investor qualified lead rate, so the amount of leads that are actually qualified to become an investor, is 80%. That would be a cost per accredited investor qualified lead of $50. Now let's say the qualified lead to investor conversion rate is 5%, then that would be a cost per investor. We would need to spend $1,000. Now we know that we would need to spend $1,000 in order to acquire an investor. Now let's say the average investment amount per investor is $50,000. Then based on a $50,000 investment and a cost per investor of $1,000 in ads, that would be a net capital raised per investor of $40,000, because 50,000 minus 1,000 equals $49,000. So our total paid advertising campaign return on ad spend would be 50. Because we spend $1, we make back $50 in capital raised. We spend $1,000 to acquire an investor. That investor invests with us $50,000. The return on ad spend would be 50x. So now that we understand these metrics, we understand that it's going to cost us $1,000 in order to acquire an investor of $50,000. We know that the net capital raise is $49,000. We know that our paid advertising campaign return on ad spend is 50x. Now we understand all the KPIs. So this is how we plan out our campaigns before actually running them. So because most people, they go into their campaigns running completely blind, as we talked about. So they don't understand, okay, based on these metrics right here, it's going to cost me $1,000 to acquire an investor. So they'll spend, $950. They'll see, I don't have any results yet. Nothing's happening. And then they'll shut down their campaigns. That's how the majority of beginner advertisers run their campaigns. But when you actually have every single step of your overall funnel laid out, you understand, okay, based on these metrics, I'm going to need to spend $1,000 in order to acquire an investor, but I'm going to make back $50,000 in investment. So that would be a 50x return on ad spend. That's pretty good. But now I know, okay, I need to spend $1,000. So once you have all those KPI metrics laid out, then we move over to the forecasting calculator. So this is where we're going to put in our desired raised capital amount. So let's say, for example, we want to raise $1 million. We know in order to now we can calculate everything out. We can forecast everything out. So based on a cost per click of $10, a lead opt-in rate of 25%, a cost per lead of $40, an accredited investor qualified lead rate of 80%, a cost per accredited investor qualified lead of $50, a qualified lead to investor conversion rate of 5%, a cost per investor of $1,000, and an average investment amount per investor of $50,000. Based on all those KPI metrics kept constant, we now can forecast out that we're going to need 2,000 paid advertising clicks from our Google search ads. We're going to need to generate 500 leads. We're going to need to generate 400 of those 500 leads are going to have to be an accredited investor qualified lead. And then finally, we're going to need at least 20 investors in order to hit our desired capital raising goal of $1 million. So based on those numbers, we now know that in order to hit $1 million in raised capital, we'll need to spend on paid advertising at least $20,000 in order to acquire those 20 investors at a $1,000 cost per investor with an average investment amount per investor of $50,000. So based on those numbers, we'll have a net capital raised of 1 million minus 20,000, which is 980,000, with a total paid advertising campaign ROAS of 50. So that's how we forecast out our campaigns. And now we know the exact numbers at a high level of what we need to hit in order to raise that amount of capital. So we break it down to the simplest of numbers. We know that in order to achieve a desired capital raised of $1 million, all we need to do is get 2,000 advertising clicks. That's all we need to buy from Google. So we have it broken down into the simplest terms possible. We need to generate 2,000 clicks from our Google search ad campaigns with all of our other KPI metrics kept constant in order to generate $1 million in capital raised. And then what you can do once you actually know these numbers, then we launch our campaigns. So that this is the next thing we're going to get into with our feedback loop. So once we actually launch our campaigns, this is the next step. So we have everything forecasted out now. Now we need to actually start running our Google search ad campaign. So we run our Google search ad campaign, we spend 2x to 3x our target CPA, and now we need to go back and actually analyze our Google search ad campaign data. We need to see, did we actually hit these KPIs? No, we didn't hit these KPIs. So what do we need to do? We need to go in and we need to optimize every single one of these levers in order to actually hit our desired goals. So what are we gonna do? Let's say our cost per click is pretty high. It's not hitting our KPIs. Well, what we need to do is we need to make sure to increase our CTR. So we need to create a better Google search ad. We need better copy. And then what are we going to do next? Well, we're going to create better copy with our ads. And then the feedback loop, we're going to go right back to the start. Once again, now that we have our better copy for our ads, we're going to run the search ad campaign again. We're going to spend 2 to 3x our target CPA, that $1,000. And then we're going to go back and we're going to analyze our Google search ad campaign data. And we're going to see, okay, we increased the CTR now. We dropped the CPC. Now we're actually hitting our goals. And then once again, let's optimize and then spend 2 to 3x our target CPA again, go through the campaign, scale it up because we're hitting all of our KPIs in order, and then we just keep on going through this process again and again and again in order to hit that desired goal of $1 million capital raised. So that's exactly how you run your Google search ad campaigns. It's just a simple optimization feedback loop once you actually have your KPIs set up. And that's why it's so incredibly important to make sure, do not be running your advertising campaigns blind and actually set up your KPIs before running your campaigns, forecast out exactly what you need to do, and then just go in and optimize those every single step of your campaign in order to hit those desired goals and those KPIs that you've set. That is how you run a Google search ad campaign. So now that we understand all the elements involved with Google search ads, let's actually begin the step-by-step guide to setting up a campaign. So here is step number 1. So we're going to go through every single step in order to set up your Google search ad campaign. And then we're going to actually go into the dashboard and set up the campaigns. So step number 1 is you're going to select the create a campaign without a goals guidance button. So there's going to be multiple different objectives that you can select, sales, leads, website traffic, product and brand consideration. But the one that we normally like to set up is just create a campaign without a goals guidance. So we can have all the different campaign types. And then in step number 2, you're going to select the search campaign type button since we are going to be specifically creating Google search ads. Step number 3, you're going to make sure that your conversion goal is set as leads, which you should have already set up when creating your Google conversion tag. Step number 4 is you're going to type in your campaign name with the proper naming convention. So the way that we normally like to set up our campaign name, so you can say organized in your Google search dashboard, is you just have your company. So whatever your company name is, I Am Capital, whatever that may be. Your campaign type, which is going to be search, and then your bidding type, which as we talked about is going to be target CPA - leads. So that's how you're going to set up your naming convention. So you can say organized. And then next we have part number 2. So for part number 2, we're going to be going into our bidding. So as we talked about before, we went over our exact bidding strategy. So for step number 5, you're going to select conversions, that bidding goal from the drop down, as this should be the one and only objective for our campaigns. And then also, as we talked about, you're setting a target cost per action. So target CPA for your campaign bidding, which will optimize to acquire the most lead conversions, but only at the specific CPA price that you set in the field. So you're not willing to spend any more than that so that Google can, just blow all of your money. You do not want to do that. You want to make sure to set a target CPA, set it low to start off with. And then if you're able to, if you're not spending through your daily budget, then you want to just increase it a little bit here and there every single day until you're actually able to spend through your entire daily budget. Then okay, this is the equilibrium point where I'm able to spend through my daily budget, get as much traffic as I want, but Google's not going to overspend and waste all of my money. Okay, part number 3 here. So step number 6, you're going to select choose networks from the dropdown and then uncheck the include Google search partners and include Google display network options, because once again, we want to give Google the least amount of control possible. We only want to be on the best networks possible. So these networks that we just talked about, the Google search partners and Google display networks, these are off-platform, not good networks that you want to be on. These are low quality placements and they're just going to waste your money. But once again, Google is optimized to waste as much of your money as possible. So you want to make sure to keep control of your campaigns and unselect all of these because they're just low quality placements. And then also what you can do, it's optional. You can select a specific location. So if you're in real estate, you want to find investors in a specific location, because those people will be more likely to understand the location and more likely to invest. You can do that as well. So you can select a target market location if you would like to acquire investor leads, and it's only going to show your ads in that specific location if you would like. You want to obviously select your language. So most times it's going to be English, and then keep all other options from the more settings section as their default settings. So the one thing that you can't do, you're allowed to select location, but if you're doing a real estate specific ad, this is one of the restrictions that has been like put onto all the ad platforms. So you're not discriminate. It's called like a discrimination restriction, housing restriction policy that they've enabled recently. So you're not able to target based on demographics. So you can't target based on like someone's age or gender or anything like that. So if you're doing some form of real estate investment, you're just not able to target by demographics. So that's just something to keep in mind. Okay, part number 4. So for step number 7, you're going to once again type in the name of your ad group. So for every single advertising campaign, we'll be getting into this once we actually go into the Google search dashboard. But there's 3 parts to every campaign. There's the overall campaign, and then there's the ad groups. So if you wanted to target multiple different audiences, you can do that. So there's multiple different ad groups, and there's multiple different ads within every single ad group. So right now we're in the second form of the campaign, which is going to be the ad groups. So to stay organized with your ad groups, you want to set up your naming convention, the company name, the campaign type, which is going to be search, the bidding type, which is going to be target CPA -leads, and then the keyword, the specific keyword that you want to utilize, and the match type for that keyword. So as we talked about, there's multiple different match types: broad, phrase, and then exact. So you want to put in parentheses the exact match type so you can stay super organized. The one way that we like to do things, once again, to not waste all of your money, especially if you're a beginner, is to add only one single, whatever your number one estimated most relevant keyword is, that's the one that you want to utilize. And then you want to utilize either broad or phrase match bidding type to start in the field. So if you're not an advanced person, and you want to save as much money as possible and not blow through your budget, the best beginner strategy that we would recommend with is to start with only the most relevant keywords to save money. If you add a bunch of different keywords that you think could potentially be relevant, but they're not as relevant as that main keyword, what's going to happen is it's just going to spread all of your money across those different keywords. And it's just going to result in an poorer overall performance, since less than 2 to 3x the CPA spend is going to be on every single keyword. So it's just going to result in a lower optimization overall. So what you want to do is, what we would recommend, if you're a beginner, if you're advanced, then you can kind of do whatever you want here. But if you're a beginner, you don't want to waste that much of your money, literally just type in the number one most relevant keyword that you believe is going to be the most relevant for your specific campaign and your specific investment strategy, and just type that one in with either broad or phrase match. I would most likely use phrase match just so you can stay super relevant to that number one keyword. And then step number 9 here. So you want to type in the required info to actually create your Google search ad using our the ad templates that we talked about. So the headline, the description, the business logo, the URL that they're going to be clicking to, the landing page, and then display path and the site links. So very, very simple, just the headline. So I assume you should have been able to create your headline, your description. We already talked about all of that, exactly how to set that up, the exact way to set up your copywriting. So you just want to type in your headlines, your descriptions. You can upload your business logo as well, the URL to your landing page, and that's basically exactly how you're going to be setting up your advertisement. So pretty simple, but you just want to make sure to utilize the best copy exactly how we talked about setting it up. And then you can preview your created Google search ads on the right side of the screen and just double check to make sure all the elements of the ads look correct without any issues, typos, or anything like that. So that's the creating your ad part. Then next, this is your daily budget. So you're going to type in your daily budget into the field that you would like to spend. And then keep in mind, Google normally will overspend around $10 to $30 per day. So just keep that in mind, that's not just a bug or anything, like they do that. So that's important to just keep in mind. And then remember that in order for Google search ads to optimize in the fastest and most efficient manner possible, you will want to make sure that your daily budget is at least 2 to 3x your average CPA. So for this example, it would be leads. So let's say you're spending $50 to $100 per lead. You would want to make sure that your daily budget is at least $100 to $200. That's what you would want to make sure in order to have the best optimization possible. So that's how you want to set that up in order to make sure that Google is able to optimize, because the number one thing you understand is Google's algorithm. The more conversions that you can get on the algorithm, on the pixel, the more they're able to optimize and find the best people possible for you. So that's why it's incredibly important to make sure that you're getting conversions on your pixel so that their algorithm can optimize to find you the best people possible. And then finally here, step number 11, you simply just do a final review of all the settings of your campaigns to double check and make sure that everything was set up correctly, and then click publish campaign in order to send your campaign into review to get started. And normally it takes just a couple hours, but it may take up to 1 business day in order for your ads to get approved by the Google team. So very, very simple. So now that we actually know everything involved in setting up an optimized Google ad campaign build, let's actually go into the Google Ads dashboard to create our first campaign live in real time. Okay, so we are now inside our Google Ads demo account, so we can begin setting up our Google search ad campaign. So to start off here, we're inside the dashboard. It may look a little bit intimidating at first, but in reality, there's only a couple core elements that you need to understand in order to set up, manage, and run your Google search ad campaign. So that's exactly what we're going to be going through in this video here. So as you can see, we have the dashboard right here. These are all the different metrics that you're going to need to understand in order to optimize and run your Google search ad campaign. So we'll just go through each of these one by one. So we're going to have the campaign name right here. So this is exactly why we talked about setting up your naming conventions for your campaigns correctly, because you want to make sure to stay organized in your dashboard. Then you're going to have the budget for your campaign. So this is going to show exactly how much money you're spending per day, the status of your campaign. So if your campaign's on or off, disapproved or not. Then you have the campaign type. So this is going to show exactly what campaign you're running. So you can be running, GDN type ads. You can be running search ad campaigns, which is exactly what we're going to be going over in this video right here. Then you're going to be able to see the impressions on your advertisements, the amount of views on your advertisements. You're going to be able to see the total cost that you've spent for the specific date range. And speaking of date range, this is exactly where you'll be able to see the date range right here and see all these different metrics based on that specific date range. And then this is where you'll be able to see the amount of conversions. So this is incredibly important because this is where you're going to be able to see the amount of leads that your campaign has generated, if that is what you have set for the conversion objective. Cost per view, that's not going to be relevant. That's normally for more video ads. So you can also run video ads through the Google Ads platform since Google owns YouTube. So that's where that would be relevant. The average cost per click is going to be incredibly important. You're going to need to know that. You're going to need to know the click-through rate as well. So the amount of people that view your ad in comparison to actually click on your advertisement, the amount of clicks that you're getting to your advertisement, that's also incredibly important. The cost per conversion, so the cost per lead, this would be, if your conversion is set as the lead objective, which it should be for this specific type of campaign. Your conversion rate, which is the amount of people that actually end up converting into a lead, that's also incredibly important. View rate and the video played to, these are not important. And then earned likes, earned views, and earned shares, and earned subscribers, that's all related to YouTube ads. So this is how we normally like to set up our Google dashboard. And in order to switch these over and change any of these, you can also go right here, go to modify columns, and then you'll be able to set up your columns exactly how you would like them in order to see your data. And as we talked about, being able to view your data is incredibly important because this is exactly how you optimize your campaigns. We went through the entire feedback loop and how to utilize that. So we're going to set up our campaign as we talked about, and then we're going to spend 2 to 3x our target CPA, our target CPA, which for example, let's say it's $1,000 cost per investor. That's how much money we're going to spend, 2 to 3x our cost per investor, so around $2,000 to $3,000. And then we're going to come back. We're going to analyze all the data. So we're going to see how many conversions did we get, how many, what's our average cost per click, what's our click-through rate, what's the amount of clicks that we've gotten, what's our cost per lead. What's our lead conversion rate? We want to be able to see all that data, and that's exactly why we have our column set up like this right here. And then we can come in and say, okay, well, our average cost per click didn't hit our KPI. How are we going to optimize that to get it down? We're going to need to generate a higher overall CTR. So what are we going to do? We're going to reiterate on our advertisement to make it more relevant and actually be able to steal more clicks from the Google search results. Then we can generate more clicks. Then if we're able to drop our overall average CPC, then we can drop our overall cost per lead if all the other metrics are kept constant. So that's why it's incredibly important to understand and be able to see all this data right here so that we can optimize, then go back to the drawing board, spend another 2 to 3x our target CPA, and then just reiterate again and again and again until we can get a great campaign going. So that's exactly why we want to be able to see all the information in the data. And once again, you can modify all these columns exactly how you would like to see the data. But it's very important to be able to see everything correctly. So now that we understand exactly how the dashboard works, that's the most important part of our dashboard, is actually being able to see and analyze the data. We can click right here to begin setting up our search ad campaign, just exactly as we've done in this training previously. So click new campaign. Then it's going to pull up these different campaign objectives. As we talked about, we want to click create a campaign without goals guidance. Then there's going to be multiple different campaign types. We're going to click search. Then we're going to have our conversion goals. So that we're only going to want to have a lead set up. So you're going to need to set this up with your Google conversion tag. Very simple. Click continue. Website visits. Let's say, for example, just put in the example website name. We'll use Fundrise for example, then put in the proper naming conventions as we talked about. Click continue. Then the way that we want to do the bidding. The way that we want to do the bidding, as we talked about, is conversions, but make sure to set the target cost per action, the target CPA. So we tell Google, do not spend more than this amount of money. Do not spend more than $45 in order to acquire conversion. And the reason that we do this, once again, is because we want to give Google and any ad platform in general the least amount of control as possible over our campaigns, because they are optimized to spend as much of our money as possible. So we want to keep control of the campaign, tell Google, okay, go out, optimize for conversions, but don't spend more than $45. And then based on if your campaign is actually spending through your daily budget, if it's not spending through your daily budget, that means your target CPA is not high enough. So you would bump it up a little bit, bump it up to $50, bump it up to $60. And then once you actually spend through your daily ad budget, let's say it's $100. If you're actually spending through your daily ad budget, that means that you've hit that equilibrium point where you're getting enough traffic, you're winning in the auction-based bidding system enough to get your desired amount of traffic based on that target CPA. So that's the perfect equilibrium point. And then customer acquisition, once again, we do not want to optimize our campaign for acquiring new customers, because that's basically Google spending extra amounts of our money that isn't targeted on the exact keywords that we want to target. So click next. Once again, we only want to be on the search network, not on the Google search partners, because they're spreading our spend across multiple different like ad inventory that they have. So this is a lower quality ad inventory. The search network, the display network, it's a lower quality ad inventory, but they put it up there because they want the beginner advertisers to actually utilize this ad inventory, not knowing that's lower quality. So it's just another reason why you want to keep control of your campaigns, because Google is optimized to spend as much of your money as possible. So then if you would like to target based on location, you can do that. If, let's say, for example, you're doing a real estate deal, you just want to target a specific target location because people are more likely to invest in that real estate deal if they're in that specific location, you can do that. Languages, obviously English. Audience segments, we're not doing any audience segments. We're utilizing keyword match types. That's very important. If you use broad match, it's going to, as we talked about, it's going to, let's say, for example, we type in our root keyword as real estate investing. It's going to find a broad range of relevant keywords that could not be as relevant and have as high of a performance because they're lower intent. They're less relevant. So what we want to do is we normally like to use phrase match or exact match to start off with. Exact, especially if you're a beginner advertiser. That's what I would utilize personally. Because it makes sure that you're only targeting the most relevant keywords. It may be at a little bit higher of a cost, but overall, utilizing phrase matches is better normally. Okay, let's exit out of all this. And here is where we can type in our exact keywords. So to start off, as we talked about, if you're a beginner advertiser, you're just getting started, just type in the single number one most relevant keyword, utilize either phrase match or exact match so that you aren't spending a ton of money. Because if you know this is the number one most relevant keyword for you, then that's going to be the keyword that is going to be have most likely the highest performance in general. So if you're a beginner advertiser, let's say you have a real estate deal, real estate investing, utilizing the phrase match. So as we talked about, there's broad match, which would be this. So it would be targeting a bunch of different broadly relevant keyword terms that are similar to real estate investing, or we can do phrase match, which is medium specific, or we can do exact match, which would be this right here. So let's start with phrase match. So exact match, you're gonna have keywords that are your cost per click is most likely to be higher because there's a less amount of traffic. There's more people bidding on the keyword, and then if you're utilizing phrase match, that's medium specific. So it's going to be somewhat medium specificity when it comes to the relevance of the keywords that you're going to be targeting, but it's going to be at a relatively medium cost as well. So that's what we normally like to start with. So if you're a beginner advertiser, I would just go with one single keyword in that specific ad group and utilize phrase match. So you can have that equilibrium point between costs and actual performance. Then what you want to do here, you can type in your exact URL of your website that you're going to be sending them to, your opt-in page, because as we talked about, we start off with the Google advertisement. They're going to click the Google advertisement. They're going to go to your opt-in page where they can opt in with their name, email, phone number, and also any qualification questions like are you accredited investor, etc. And they move directly to your thank you page, and that's the final part of your Google search ad campaign funnel. So this is where we're going to type in our actual headlines to our advertisement. So for example, invest in multifamily real estate. Multifamily real estate investing. Just put multifamily real estate. Invest in real estate. So this is exactly where you would type in all of your headlines, and you'll be able to see all of your headlines right here. And we already went through exactly how to set up your exact keywords, exactly how to the ad template that you want to utilize. New way, make sure that's easy and quick to get done. Make sure that it's low cost, guaranteed. We went through the entire script of exactly how you want to set up your Google Ads advertisements to steal the largest amount of clicks from your competition. So you would know your specific investment opportunity the best. So you would know exactly, you would be able to set up the best headlines, description, everything like that for your specific investment type. So here, once you're done with your headlines, then you can type in your descriptions as well. So as you can see here, start investing is in less than 5 minutes. So that's easy and fast with as little as $10, low cost, and also describes that it's easy. The largest private equity investors in the world. Fundrise is America's largest direct asset alternative asset manager that displays trust and credibility. So you can type in all your descriptions right here. Then if you have a business logo, you can just upload that right here. So it's going to show up right like that. If you want to include any site links, I wouldn't include any site links because you want to go directly to the landing page. And we have one single call to action, which is to sign up and opt in for our qualification form. So that's how you would want to do that. And that is basically how you're going to set up your Google search ad. The most important part here, obviously, as we talked about, is to make sure that your headline and your description is as optimized as possible. It entices your specific ideal investor avatar the most of any other advertisements. You want to do a full competitive analysis. If you're going to be targeting the keyword real estate investing, you want to type that into your Google search bar, see what all the other top performing advertisements are on the top of the Google search results. See exactly what they're doing and see how you can put your own unique twist on it to further entice anyone that's going to be typing in those specific keywords to click on your advertisement in comparison to all the other advertisements. What makes you better? Why is your value proposition better? Very important. Earn 13% returns. So you can see all of the different combinations that the Google algorithm is going to create when running your Google search ad campaign. And then once you're done, you can click done, click next, set the custom budget. So whatever you like for your budget, but you want to spend 2 to 3 extra CPA. So if it's going to cost you at least $50 for a lead, at least $100 to $150 is what you want to start with. You can start with lower, but once again, the ad platforms work with an algorithm. So the more conversion data, the more leads that you can generate, the better that their algorithm is going to be able to optimize and acquire you leads at a lower and lower cost as they figure out what the best consumers are to target with your paid advertising. Then lastly, you're able to review the campaign, make sure that everything's correct, and then finally, once this ends checking for errors, you'll be able to submit that and then begin running your campaign. So that is exactly how you set up a Google search ad campaign. It's relatively simple. And then once you have your campaign set up, you'll be able to see it right here in the Google Ads dashboard. It should be approved within one business day, most likely within just a couple hours. You'll see the status turned to running and approved. You'll be able to see your exact campaign name right here, the budget, as we talked about all these different metrics, and then finally, as we talked about, your feedback loop. So you're gonna run 2 to 3x your target CPA. So let's say, for example, it's $1,000 your cost per investor. You're gonna run $2,000 to $3,000. Then you're gonna go in and you're gonna view, okay, how many conversions did I get? What is my click-through rate? What is my average cost per click? What is my average cost per conversion? The most important that you can see right here. And then what you're gonna do is you're gonna go in, and then based on what you're seeing here, you're going to optimize those campaigns. Optimize your advertisement so you can get a higher click-through rate, so you can get a lower CPC, so you can get a lower cost per lead. And then you're going to run 2 to 3x again, analyze the data, optimize again, and it's just a consistent feedback loop again and again and again, so you can hit your exact goals and KPIs that you need to hit in order to hit your capital raising goals. So that is exactly how you set up a campaign. Now let's move on to the next section. Okay, so now that we've created our Google ad campaign, let's just go into our Google ad campaign quick start launch strategy. So this is the exact strategy to get started immediately in launching your Google ad campaign now that you understand all the different elements involved and how to set up your campaign. So step number 1, you're going to set up your Google Ads website with qualification form opt-in page and the thank you page. So just set up your entire website in order to actually start acquiring these leads. Step number 2 is you're going to set up your Google conversion tag and make sure that it's to test it, to make sure it's actually active and verified and working in your dashboard. So that's incredibly important. That's the pixel, the conversion pixel. So you need to make sure that's set up so Google can actually optimize and find you the best people possible. Very simple to do. Step number 3, as we talked about, you're going to plan out your Google ad campaign KPIs with our investor lead generation forecasting calculator. So we went through exactly how to set up your KPIs and exactly how to utilize that forecasting calculator in order to see every single KPI that you need to hit in order to raise your desired amount of capital. Step number 4 is you're going to set up and launch your Google search ad campaign with the keywords, bidding, and ad copy. So we went over exactly how to set up all the ad templates. So the headlines, the description, everything surrounding that. We went over that you do not want to utilize the maximize conversion strategy for your bidding. You want to utilize the target CPA so that you tell Google, I do not want to spend any more than this amount of money in order to acquire a conversion. And we also went through exactly how to find all the best keywords to target with your Google search ad campaigns. Step number 5, and this is where we're really getting into actually launching your campaign. You want to start off your campaigns with a daily budget of 2x to 3x your target CPL. As we talked about, your cost per lead. You can start with a lower daily budget, but the optimization will take a little bit more time and may result in reduced optimization overall since you're getting less data on that pixel. And then step number 6, this is incredibly important. Do not make any changes to your Google ad campaign in the first 1 to 3 weeks of your ads running. The number one thing that it's incredibly important to keep in mind when running your campaigns in the first 1 to 3 weeks is that you may start out getting high CPLs. So you may see that your ad campaigns aren't performing that great at the start, but this is simply just the initial learning period. As we talked about, Google has an algorithm, and in order for that algorithm to optimize, you need to get as many conversions onto the algorithm as possible, onto that conversion pixel. So the more that conversions that you're able to get on their pixel, it's going to help them find your best target lead, like with the best data profile that's most likely to actually become a lead. So it's just going to continuously optimize further and further and further with every conversion you get on your pixel, and then the CPLs will gradually drop over time. So that's just something to keep in mind. If you do end up seeing a high cost per lead for the first 1 to 3 weeks, don't worry, especially if you're on a fresh account with no conversion data. Every single conversion that you get is helping Google find your target prospect that you're looking to get. So that's incredibly important. So that is our Google ad campaign quick start launch strategy. And then this is exactly how to scale up your campaign. So this is our paid advertising systematic scaling quadrant. So as we talked about, you want to spend at least 2 to 3x your planned cost per acquisition with your campaigns. So that's going to be, let's say, for example, your average cost per investor is $1,000. You want to spend at least $2,000 to $3,000, and then you want to reassess your campaign for scale. So you're going to launch your campaign, spend at least 2 to 3x your planned cost per acquisition, and then what you're going to do is you're going to reassess your campaign based on the systematic scaling quadrant. So on the top left side here, to start off, let's say, for example, your cost per lead is within KPI. So let's say, for example, you want to spend at least $100 cost per lead, and you want your cost per investor to be $1,000. So for this example, Your cost per lead is within KPI, so it's within the $100 KPI that you set, but the CPA is not within KPI. So you're spending over $1,000 cost per investor. Then what you want to do is you want to keep your campaign daily budget the exact same. So let's say, for example, you're spending $200 a day. You want to keep the daily budget the exact same, since your CPL is within KPI. So you're getting there. You're not there yet because you want your CPA within KPI, but you're getting there. So what you need to do now is, if your CPL is within KPI, what it's telling you is that there's something wrong with your lead to investor conversion rate. So what you need to do is you need to optimize your lead to investor conversion rate funnel levers in order to get your CPA into KPI. So you need to work with your investor relations team, help them optimize their sales ability. There's something that has to do with the problem is basically when you're seeing that your CPL is within KPI, you understand that your problem must be with your lead to investor conversion rate. So you want to focus on optimizing whatever you can do to convert more of those leads that you're generating that are within KPI to actual investors. That's what it's telling you right there. And then what you're going to do next is then you're going to go back and you're going to spend at least 2 to 3 extra CPA. Then you're going to once again come back to the scaling quadrant. And then the next one here, let's say, for example, your CPL in the lower left-hand corner. Let's say your CPL is not within KPI now, and then your CPA is also not within KPI. So what you want to do is keep your campaign daily budget the same, but now you know that you have problems across the board. So you want to optimize your CTR, your CTC, your lead conversion rate, your cost per lead, and your lead to investor conversion rate funnel levers to get your CPA into KPI. So you need to optimize every single part of your campaign. So you would want to go in, you would want to reassess your or recreate your Google search ads. You would want to maybe change your landing pages, whatever you can do in order to optimize virtually every single funnel lever, because none of your metrics are actually in KPI. Then you want to spend 2 to 3 extra planned cost per acquisition again, and then we're going to come back to the scaling quadrant. So let's say, for example, now your CPL is not within KPI, but your CPA is within KPI. So what you would want to do, because your CPA is within KPI, that's the furthest downstream metric. So that's the most important part. So your cost per lead may be, let's say, for example, $150, but if your CPA is within the $1,000 limit, that's the most important part, because you're acquiring investors for $1,000, which is your furthest downstream metric. So what you want to do here is you want to scale up your campaign daily budget by 20%, because things are still looking good. Your furthest downstream metric is the most important, and you're actually hitting that. But what you want to do is, what it's telling you is that there's something wrong with your advertisement. So your CTR, your CPC, and your lead conversion rate funnel levers need to be optimized in order to get your CPL within the KPI. So you would want to optimize your ad copy for your Google search ad. You would want to optimize your landing pages to increase the lead conversion rate. And then, once again, spend 2 to 3 extra planned cost per acquisition, reassess using our scaling quadrant. And let's say, for example, now your CPL is within KPI and also your CPA is within KPI. So what do you do now? Well, you're perfect. So you want to scale up your campaign daily budget by 20%, and then just go through the same exact process again and again and again. That is how you utilize our paid advertising systematic scaling quadrant to scale up or down your campaigns. And then once again, so this is our campaign optimization feedback loop. You're running your Google search ad campaign. You're spending 2 to 3 extra target CPA. You're analyzing the Google search ad data. You're optimizing those levers, and then you're going through the feedback loop and doing it again and again and again. That is how you run your Google search ad campaigns. So congrats, you now have the step-by-step guide to implement our $1 million investor cap raise Google Ads lead generation formula. So what you've learned today is just one single component of our overall digital fundraising operating system to raise millions of dollars in capital online on autopilot for virtually any business venture. But what if I told you that we've actually invented an even more effective new way to advertise directly to high net worth investors online? Introducing InvestorFeed, which is our $100 billion plus high net worth investor audience network. Because see, the problem with advertising online in order to acquire investors is that there's billions of users online on any platform, Google, Facebook, whatever it may be, but only approximately 14% of the USA actually qualify as accredited investors. So now the question is, how do you focus your resources, your effort, your time on engaging only specifically this qualified investor audience that can actually invest a reasonable amount into your investment offerings? Well, the solution is our InvestorFeed pre-built $100 billion plus investor audiences, which can be directly uploaded into any advertising platform as a custom audience to target with paid advertising in just a simple couple clicks. So we basically unlocked the ability to advertise direct to investor on the internet by uploading these InvestorFeed audiences and forcing ad platforms to only show our ads to our proprietary $100 billion plus network of pre-qualified high net worth investors. Because the problem with traditional advertising in order to acquire investors is you would set up an advertisement on Facebook, Google, YouTube, whatever it may be, and maybe only 1 out of every 10 investors were actually qualified as an accredited investor or someone that has, a decent amount of money that has the ability to actually provide investment into any of your offerings. But with our new way of advertising, our direct to investor advertising strategy, utilizing our InvestorFeed pre-built $100 billion network of pre-qualified high net worth investors, is you're able to set up the same exact ad on Facebook, Google, YouTube, whatever it may be, and automatically know for a fact and force the ad platforms to only show ads to pre-qualified high net worth investors that have the money to invest and at a reasonable amount. So it's a complete revolutionary change of the game where instead of, a small, tiny percentage of people actually being qualified to invest in your offerings with paid advertising, we have unlocked the ability to advertise direct to qualified investors. It's a complete change of the game. And this right here is just one single component that allows us to basically create this brand new revolutionary system of digital fundraising online. So we have InvestorFeed, and then we have our overall digital fundraising operating system that can be utilized with InvestorFeed. So step 1 of our digital fundraising operating system is to create a unique investment thesis. So that's step number 1 of our digital fundraising system, where you're going to craft the unique and differentiated thesis behind your core investment strategy, which is going to allow you to increase the amount of response and overall advertising performance. So that's step number 1, the core foundation of our digital fundraising operating system when utilizing InvestorFeed. Then part number 2 is our online investor attraction platform, which is going to allow you to lay the foundation of your online platform to attract your ideal investor avatar and educate them on your unique investment thesis with relevant evergreen content. And then once you have your platform set up, you can utilize our ChatGPT AI content creation engine, which allows you to deploy cutting edge AI technology to automate the creation of high quality, engaging content across all of those platforms with unmatched efficiency. And then we move into our conversion content amplification formula, which is our proprietary strategy, allowing you to leverage our InvestorFeed investor audiences now with those paid advertising platforms to instantly amplify your targeted conversion content directly to our $1 billion network of pre-qualified high net worth investors. And then we move into the next part, which is our intent-based inbound acquisition investor funnels, which allow you to systemize your inbound high net worth investor lead flow with an automated acquisition investor funnel that converts ice cold strangers into interested investors on autopilot 24/7, 365, even while you're sleeping. Then next, we move into our omnipresent authority retargeting matrix, which is where you're going to build an omnipresent filter bubble around high net worth investor prospects that engage with your platform across essentially 99% of the internet with retargeting to establish yourself as the number 1 perceived authority for your investment strategy. Then next we have our P2P social media protocol, which allows you to transform your dead social media accounts into an automated evergreen system that educates, nurtures, and converts prospective investors into your pipeline. And once they're in your pipeline, we have our investor pipeline nurture automation sequences, which allows you to plug in our sequence of proven and tested nurture automations to develop a pipeline of lifetime repeat investors on autopilot, allowing you to easily raise large amounts of capital quickly from your pipeline whenever you launch any new investment offerings, which is a simple couple emails and calls. And then finally, your control center KPI analytics dashboard. We talked about how important it is to have all of your KPIs laid out so you can forecast exactly what KPIs and you need to hit in order to hit your capital raising goals. So you're going to be able to install our control center CEO dashboard, which will provide you a Hawkeye's view of virtually every single KPI metric within your digital fundraising operation in order to hit your capital raising goals. So this is our entire digital fundraising operating system. It's not just about advertising online. You need to implement and install the entire system and then utilize our system with InvestorFeed. That is exactly how you raise a ton of capital online on essentially autopilot. This is our overall digital fundraising operating system. You implement this, and this is exactly how you raise tons of capital on autopilot for virtually any business venture, any investment opportunity, whether it be real estate, startups, whatever it may be. This is the core foundation. This is the core operating system behind raising funds online, specifically with InvestorFeed. And this right here is our InvestorFeed digital fundraising flywheel. So this is exactly the benefits of our digital fundraising operating system. Number one, it's predictable. So instead of one-to-one in-person networking in order to acquire investors for your investment fund, with our digital fundraising system, you're able to control your lead flow of accredited investors like a faucet with precision, because now you're utilizing advertising. So when you need more investors, you simply just scale up your campaigns, and that's the next part of this. You're able to, it's incredibly scalable with our digital fundraising system. So you're able to scale up your accredited investor acquisition based on your operational capacity. And then the next best thing about our digital fundraising system is it's self-sustaining. So you're able to turn your investor acquisition on autopilot, bringing in new qualified leads even while you sleep. So it's a complete game changer from the traditional in-person one-to-one networking. Now it's one-to-one, it's self-sustaining. You're able to generate a predictable and scalable amount of investor lead flow into your whatever your investment offerings may be. You're able to launch your investment offering, begin running paid advertising to that investment offering. You're able to also get organic discovery from your online investor attraction platform, which is going to generate new accredited investors for your investment offering. And then also you have your existing accredited investors, and they're going to be referring more accredited investors if you're doing a great job and providing them at great returns. And then it's just a consistent flywheel of more and more accredited investors, qualified accredited investors into each and every one of your new investment offerings. That is how the flywheel works. It's an automated, systematized, self-sustaining way of generating new accredited investors, and then also simultaneously educating them and nurturing them in your pipeline on autopilot, one-to-many instead of one-to-one. That is the key here. So next, you're able to future-proof your overall fundraising systems. You're able to establish an ironclad system that will continue to generate leads for the long term, as long as the internet is available. It's incredibly efficient. This is one of the best parts about it. So you're able to leverage systematized acquisition and education and nurturing to save time, efforts, and resources, since it's one-to-many. And finally, you're able to get a competitive edge and outcompete traditional investors still stuck on those one-to-one in-person outdated strategies. So you're able to upgrade your investment offering, your investment investor acquisition strategy online, and utilize our digital fundraising operating system in order to create this flywheel of this predictable, scalable, and self-sustaining flywheel of accredited investor acquisition. That is the key behind this. So that is our training today. We went through section number 1, introducing the new direct-to-investor era for raising capital online without any gatekeepers. We went into exactly what are Google Ads and how are they used for high net worth investor lead generation. We went into the complete breakdown of our entire Google Ads high net worth investor lead generation funnel. We went through the step-by-step guide to actually setting up a Google Ads high net worth investor lead generation campaign. We went over exactly how to leverage our proprietary InvestorFeed $100 billion plus investor audience network to advertise direct to investor and force ad platforms to only target our pre-qualified $100 billion plus network of high net worth investors. And finally, we went over our digital fundraising operating system to raise capital on autopilot with InvestorFeed for virtually any business venture. So thank you very much for watching. And if you have any questions whatsoever, feel free to go to our website, schedule a call, or email us at info@investorfeed.org.